Ladies and gentlemen, welcome to the Midday Market Monitor. In today's Friday show, we are ending out the week with a slightly red S&P 500. However, we're green on the week. It's actually been quite a successful week. A lot of that having to do with the roundup of big tech earnings. As you can see from yesterday, we ended up seeing quite a large pop in the S&P. And it's kind of crazy because whenever NVIDIA makes up nearly 9% of the overall index, and then that stock goes up by 9%, it's almost making a practically 1% upside on an entire index by itself. Pretty wild. Now, today is a little bit of a drawback because NVIDIA is in the red, down 4% right now, $218. Tesla also down roughly 2.5%. But the rest of the Mag 7 doing quite well on the big tech side. We have Amazon with a very large upgrade from Wall Street today, leading the charge here, up almost 3.5%. Microsoft up 2.2%, Apple up 1.8%, Google up 1.4%, and Meta up 0.6%. So that's what's leading the charge right now on big tech. We're having some other green names that are actually selling off. I'm surprised by AFFIRM. They were up nearly like 11% earlier. But overall, there still is quite a few names that are quite green. ServiceNow actually $143. I'm curious if maybe it might be time for us to look into, the SaaS names, or are they maybe closing out some of those ridiculous, upsides? Because obviously, whenever this was, much closer to $81, there's a huge difference between buying in at $81 headed towards, let's say $200 or $300 a share versus $140 going up to $200. Big difference. But hello, everyone. Hello. It's covered call day. Yeah. Do you guys have covered calls outstanding right now? Maybe some people that might have got quite lucky on NVIDIA. I know that for sure, because heading above 230, I know had some people a little bit worried. Now under 220 again, I think a lot of people are quite fine on some of those covered calls. So that can be quite good. Hello. Did you guys see the NVIDIA thumbnail that Marshall ended up putting together yesterday? There were a couple ones that we ended up going through, and I mean, honestly, they were all like unbelievably amazing. I couldn't believe the thumbnail game that Marshall's starting to get down now. So it's funny because my favorite one versus what people are really reacting to, two different stories. Here, I'll show you what they look like, or at least the ones that he had sent me. Let me see if I can pull this up. Open. There we go. Here, take a look at this. Tell me this is not the greatest thumbnail that's been on the channel so far. How freaking funny is that? Or there's also this, which whenever you look straight at it, it makes me look a little bit weird. But whenever it's a very, very small image and you're looking at it like this, it looks fine. But whenever you zoom in, it looks a little bit weird. But so freaking funny that Marshall put those together. He's doing great work. Okay, so I did want to talk about that. I watched the trailer. Big difference between scrolling through a trailer like what I did the first time. I was throwing some real shade. Now, I ended up seeing the entire trailer. It looks phenomenal. I actually think that this is going to be, and most people already know that it's going to be an insane hit, but I really think, assuming that there's not an incredible amount of bugs or something like this, but due to how long that they've been taking to actually put this together, hopefully they've been knocking some of those out for a really good release date. But there might be a real opportunity to buy Take-Two and take advantage of a launch that might even be more popular than what was initially thought out to be. And maybe that's because or maybe that's already like in the books a little bit. Stock's up 2.3%. Overall market cap 44 billion on Take-Two, and it's really, I mean, there is other businesses, but this is really a bet on GTA 6, which is quite incredible. But if there's a possibility that this game becomes almost like an entire ecosystem, you know, I wouldn't say necessarily that GTA 6 was quote unquote the metaverse or whatever, but there were worlds and servers that were created inside GTA 6 where people were running their own businesses, and GTA 6 might even be a larger build out from that. Essentially, the last game was 13 years ago. Do you think, and how much of this is already anticipated? You know, I'd have to go through and look at the valuation. I'm not much of a trader myself, but the trailer is quite exceptional. Yeah, the online part's going to be insane, and I really do think that the servers that are going to be made on that, and in terms of the microtransactions and all of these that will be created on the online servers, how much of that can Take-Two actually capture? It's pretty ridiculous. Oh my gosh, is IREN getting destroyed right now? IREN down 13%. I mean, yeah. However, you know, well, the numbers weren't great, and I don't get a good feeling about the board of directors, and I don't know. I kind of have a couple rules in terms of buying into names that are catch-up plays on the rest of the industry. Maybe IREN is that. You know, you have to be really, really concerned about buying into businesses that are underperforming, just assuming because of they're a part of a sector that is growing, that they will have a turnaround. That may not be the case, but there's quite a difference. Like, whenever you look at cybersecurity, there is quite a difference whenever it comes to SentinelOne and CrowdStrike and the actual technology that's underlying those two businesses. Okay. On the NeoCloud side, specifically, like bare metal infrastructure as a service is a real opportunity. Like just having a relationship with NVIDIA and getting access to those chips, at some point, does IREN get extremely undervalued just based on their total amount of power and access to chips, just their relationship with NVIDIA? I'm not sure. By the way, I ended up reporting on this yesterday. I'll just repeat it really quick. The information reported that NVIDIA is canceling their cloud revenue sharing agreements, saying that there was some antitrust scrutiny and they don't want to play around with that. So it was going to make up for a small percentage of overall revenue. Supposedly, NVIDIA has then come out and said, hey, we have no plans to actually turn this down. And this was a little bit of fake news from the information. So maybe that's rumors of it about to be canceled later on into the future. I mean, I can't imagine that the information is just writing articles for the sake of writing articles. There must have been something underlying that they were writing on, right? People similar with this, people familiar with the situation. But right now, it seems that NVIDIA said, hey, we don't even have plans to cancel it. So, yeah. Now, speaking of NVIDIA and some of their sales and everything, which this company is really selling off here, now down 4.2%. There was a report from TrendForce that came out that talked about how Vera Rubin's average selling prices are actually expected to be twice as much as the Grace Blackwell 300s or the Grace Blackwell Ultras. Okay, twice as much. We've obviously knew that there was going to be a large increase in price, and some reports had it as high as 80%. Now, TrendForce is coming in saying it's going to be more than double. So, if that ends up happening, this could also be a big step up in terms of the reason why they believe that they are going to see such an increase in revenue. And although they will be supply constrained, they're still going to be selling Grace Blackwells and everything. The actual amount of racks that need to leave out the factory floors can be a lot less and still make up for similar amounts of revenue. So a potential 70% increase in overall revenue might be a similar output of chips, but just a higher average selling price. And mind you, the margin also is looking to stay consistent as we look into the next year that, we have roughly an average selling price, we have an average selling price of roughly 100%. They are talking about next year being potentially 70% higher. That seems maybe sustainable, except it's just a matter of can they get the supply online? Hello, hello, hello. Yeah, what's happening to the market? Seriously, what is selling off this name? But I wanted to invite a guest who I wanted on yesterday. Wasn't able to come because he was at the office. Today, he is free. As I've already said in the title, we will be having Farzad on later about 3 p.m. So Farzad's going to be joining us, talk about SpaceX, Tesla, everything really Elon related, as well as the just general tech build out. So I'm really excited about that. That's at 3, but we are going to be having roughly a full day worth of news stories and different guests joining us to round out the week. Yeah. Okay. Maybe the great and powerful Matt Money. Who knows? Crazy people selling NVIDIA after incredible earnings. I mean, you never know with this market. I think people still question. They get different news stories. Ed Zitron was on DOAC, and they ended up talking about how none of these companies are making money. And by the way, I listened to a lot of that, and this is actually something concerning that I find with Ed Zitron, which made me think about some of the other interviews that I've ever listened to of like extremely contrarian takes of people who are doing these interviews that are telling you things that are factual, but they're not giving you all the details. And I was noticing this constantly with Ed, where he was talking in that interview where he said, Amazon and Google, Amazon just gave Anthropic $50 billion to make sure that they survive. And it's like, okay, that's such a half truth. Like they gave them $50 billion. You're acting like, they just wrote them a check. Where on the other side of in reality, what they did was they invested in that company and bought essentially $50 billion worth of equity, right? Something that still you could say, hey, that's pretty much the same thing. What's the equity worth if this company is going to zero? Completely understand that. But the difference is that one would be an unprecedented level of funding, and the other one would be a level of funding that happens at every round of every company's valuation ever in history. Any public company on earth has gone through some round of funding, whether that's an initial IPO or seed rounds or, all the venture rounds that they had gone through, raising money to potentially grow your business. That J curve of earnings always happens, at least unless you're just some homegrown family business that's generating purely off cash flow. But it's fine to not be a company that's just generating purely off cash flow, right? It's okay to do that. Has it ever been seen at a scale that's happening at OpenAI and Anthropic? Never before, right? They're definitely breaking down some of those barriers, and that definitely can prove to be more risky. Higher raises than ever before, a build out larger than anything ever that we've ever seen in history. I can understand being skeptical, but whenever you're going on and you're taking out some of those truths, you're skewing an audience that might not be privy to all the information that's happening. It's not like, whether you're skeptics or bulls of NVIDIA and this overall build out, I would say most of us at least know what's happening. We follow it every single day. The people who are watching Diary of a CEO might not even know who Ed Zitron is. is not watching that because they're looking for what he has to say. They're looking at it because they watch every episode of Diary of a CEO. They're, it's like the Joe Rogan experience. You don't really know who the next guest is, but you're willing to listen to whoever that podcast host had just brought on. So, I don't know. It's just pretty surprising to me that, and honestly, I was thinking about this. We're likely to probably see Ed Zitron because of the views, because of how much this industry is hated. I could see him going on many, like a podcast tour, potentially getting on Joe Rogan and spreading this FUD because, and that's his free will. I'm not going to he doesn't have to speak kindly of the industry that I'm in. It's just, where's the fact checking? Why isn't he doing these podcasts with people who are actually in this industry? He's talking to these people who sit on the fence. He's not actually doing the bear versus bull case. He's blocking people like Stephen Fiorillo. He's not countering the people who go opposite of what he has to say. I just don't like that. I don't like that. Diary of a CEO. I did not. Don't start putting words in my mouth. Ask Ed to debate you. No, he'll block me. He for real will not. He has not talked with anyone who's in the AI industry. He's talking to CNBC and Diary of a CEO, and all these guys. And they're not there to just, completely tear him apart. They're trying to get the clickbait sayings. They want him to say the most outrageous, contrarian thing that they can say, so then they can put that as the title. Ed Citron, that's funny. Okay. Is Nebius and CoreWeave also falling because of this sell-off in IREN? Also, I think a lot of people are putting a lot of weight on what Palo Alto CEO said about the neoclouds. We saw the increased amount of spend. It's also why NVIDIA could be down right now is I think IREN is the epitome of increased CapEx, talking about 25 billion. And I mean, truly zero to show for it today, right? $130 million of revenue. That's probably all Bitcoin. Like it's, I think they are the most egregious, and I'm not even anti-IREN, but if you talk about, hey, these companies can't make money, the most recent, or let's say the first ones, Nebius and CoreWeave, ended up putting up like genuinely great numbers. And the market really, really reacted positively to that. Those companies were up 20, 30% on their earnings, right? On the other hand, you have IREN that just showed off earnings after NVIDIA's earnings. So whenever you go into NVIDIA, they break out their numbers. And the most recent numbers that we ended up seeing was IREN said that we have a deal with a frontier lab for multi-years and we don't know how much money we just made. Okay, what the heck does that mean? Is it signed? Is it not signed? And I think that they are not proving it in their earnings. They're not proving it in their revenue. And yet, what you see from that is, here, let me show you this really quick. And yet what you see from this is the fastest growing segment on NVIDIA's earnings was AI clouds. So is there investors that are thinking, okay, wait, is this the type of customer that is making all the revenue for NVIDIA? The one that's growing 138% is the type of customer that increases CapEx to 25 billion with nothing to show for it? With no customer with no customer contracts they can talk about, and no revenue, no earnings, nothing. And that is worrisome. But they're not, like, you can't put these companies in the same bucket. There's a big difference between Nebius and IREN, right? Nebius is putting up real numbers. They are signing huge contracts in terms of the payments per megawatt, especially on the shorter term deals. Like those are exciting. I think IREN will be fine as well. I'm not suggesting that. What I'm saying is the market is likely reacting negatively to NVIDIA today, not because of some analyst downgrade or anything like this. It's only gone in one direction. It's been extremely great. But you have a large customer, $25 billion of CapEx is no small customer here. I mean, it's not Amazon, but it still is a large potential CapEx number. And that may not be sustainable. Right? I think that's a little bit of the worry as well. Okay. Amazon, however, these fears are not being shared with the rest of big tech. We have Amazon up 3.5%, Microsoft up 2.3%, and Apple up 1.7%. Which I am just a big believer in big tech in general. Even if the build out doesn't necessarily go through the way that NVIDIA or myself wants it to go down, you have the customers like Amazon or Microsoft that can be a little bit more agile in their way to say, hey, you know what? We're done purchasing. We're going to focus on free cash flow. We're going to continue to earn. And if the soft, SaaS apocalypse doesn't actually end up going through and it's actually, recovery season, well, then there's going to be a lot less concern on whether or not Microsoft is not only going to remain free cash flow positive, but that customers are going to continue to, retain, continue to spend, likely with higher margins. VIX is still sub 17. Well, I mean, yeah, the S&P is 7,700. In the grand scheme of the markets, we are practically at all-time highs. This is, IREN's down day does not control the broader market. And then you've got a lot of software names that are still recovering greatly. Like look at Salesforce here. Hit 260 today, 259 right now. Pretty nice. Yeah, it's the it's the SaaS apocalypse. Exactly. The naysayers are the ones that are taking the brunt of it now. Wix back up to $87. AppLovin $318. Still a ways to go. Mercado Libre just a little bit sub 2,000. I do hope, for real. I know. I'm sure they don't care. I think Mercado Libre is just so not a retail favored name, even in the Latin American space, which I don't think any of those names get a lot of love. But like, I don't think Mercado Libre is even talked about as much as Nubank. Nubank has a lot more coverage on the retail side, and I think a lot of that has to do with the price of the shares as well. I wish Mercado Libre would come and do a 10-for-1 split, 20-for-1 split. Honestly, they could probably do even a larger split, something like 25 or even 50x split would be nice. I own Melly too. I think this is an amazing business. It's even bigger than Nubank. Like it's like the biggest company in LATAM in terms of technology businesses. Publicly traded. It's nice. Okay. SoFi's down a lot today. How much? Yeah, that's down a lot. 4.9%. Nebius down 5.4%. Fastly down 5.7%. Enphase down 5.8%. $36 stock right now. Bitmine down 6%. Where is Ethereum here? 2440. And Bitcoin just under 78,000. Okay. NVIDIA's forward P is the lowest it's been in a long time. Not only is their forward P the lowest it's been in a long time, just based on what Wall Street is predicting, but Wall Street is sandbagging NVIDIA's earnings like crazy. So I can show you this here. It's pretty nuts. This is even after all of the upgrades. So we saw a flurry of upgrades the other day. Okay. What I'm going to do is go into next year. They expect, that can't be right. Oh, sorry. That's finishing out the year. And then January of 2028. I don't like looking at it this way because they're not. I'm getting the numbers confused in terms of calendar versus otherwise. So let's go to Seeking Alpha really quick, and we'll just take a look at it that way. Okay, earnings revision. So mind you, there was some unbelievable upgrades. I showed you guys this chart the other day, and it did not look like this, clearly. So January of 2028, we revised from $12.84. I can't really use my mouse, but if you guys can zoom in on that a little bit. January of 2028, $12.84. January of 2029, $15.87. January 2030, $17.50. The next day, they went from 12 to 15, okay, 15 to 20, and 17.50 to $21 a share. I mean, it was huge upgrades. Same with revenue. Like, look at the ticks up. Like, I mean, the revision in this company has just been insane. Yet, even whenever you look out to next year on revenue, they're talking about this company doing about $411 billion, which is the exact estimate that I put on my numbers as well. And then they have it growing at 61.9%. That's not what Jensen said. Jensen said, we feel very confident that we're going to grow by 70%. And that's at a supply constrained outlook. We're going to do everything that we possibly can to ramp that up. The great and powerful Matt Money. How you doing?
Every day I wake up and I aspire to be more like you, Tanner.
Oh, relax. I just taking a look at these beautiful NVIDIA numbers. Stock's down 4%. What the heck's going on?
What is it? NVIDIA's down?
NVIDIA's down 4%. And look at these revisions on earnings. And the stock is pretty much at the same price that it was pre-earnings. And I'm just curious, are we even numbers-based? Are we in a spot where we're still basing NVIDIA off earnings? Or is this just based on people don't want to run this up because of concentration in S&P? Is this, people are not believing in how long the build-out's going to last? I haven't really heard your thoughts since after earnings, so I'd love to hear some.
Well, phenomenal earnings. And, there's some discussions, there's some bears out there talking about how they just don't understand the return on invest capital. I mean, just based off of what Jensen said and just having conversations with ChatGPT and Gemini, I'm just like, okay, who's right? And I think you're right. I think Steve is right. I think everyone talking about how these guys see the value in this. The growth is crazy. Even if there is a race to the bottom in terms of the, let's say, old models and only being able to get $1 or something per million tokens, the frontier models are always going to be able to charge 5 to 25, and depending on the speed of them, they're going to be able to charge more. These things within 2 years, easily within 2 years, you're getting your money back on even these Vera Rubin chips, and then you just have pure profit on top of that. So the return on capital is going to be close to 30%. And then if you actually start to look at what they can do when they lever and maybe pay 40% equity and 60% debt, you're talking about levered returns of north of 50%. I mean, that's why you're starting to see the Googles of the world and everybody go out and take on debt, is because the unlevered returns on that is it's going to be stupid. So if you're able to borrow at 6, make 50 to 80% on your money, that's just insanity. Why wouldn't you do that? So when Jensen's talking about if you're just paying it outright, let's say, and only talking about buying it outright for $45,000 for these Vera Rubin chips, that's where you're talking about less than 2 years. You start to lever and you say only put down 40% equity, 50% equity, and the rest is you're only talking about $22,000 to $25,000. The return that you're going to be getting per chip is going to be north of $30,000, $40,000 per annum at that rate. So that's when Jensen's starting to talk about less than a year payback for a lot of these things. If you're actually levering and you're actually to get some of these things on debt, the return is just absolutely phenomenal. I think with NVIDIA, the reason being is I think people are starting to see maybe the potential bottlenecks of that. Will they be able to deliver? I don't necessarily think that that's an issue, but I think a lot of that money right now is going into Amazon and Microsoft. While NVIDIA is down 3-4%, Amazon and Microsoft are absolutely running today. Microsoft's back above $500. It's actually, I don't even know, it might be above 520 at this point, but it's up 3% or something today. Yeah, like it's you know, I'm up 40 something percent from the lows on my Microsoft investment. So insanity. I think that money's not leaving the entire system. I think people are just rotating a little bit, and I am surprised to see some of the upgrades that people have been giving for NVIDIA. $500 was one of them, like $515 or something like that. I'm not saying that I disagree, but in what time period? That's kind of insane. That's over a $10 trillion company at that point. So
I think that was a 12-month time frame from Raymond James.
Do you think that that's warranted?
No. It's the same company, different analysts, to be fair, same company that put an $800 price target on SpaceX. That being said, I do think that this company, I believe that this build-out is going to last a long time. I think that it should be priced as if it is not going to last a long time. There should be a margin of safety there. I think that whenever Jensen says that next year it's going to grow by 70%, like, who is anyone to say that he can't do that? I mean, I'm not sitting down with Morris Chang. Like, who are these people that's saying that they can't end up supplying that amount? He has more information than anyone.
And do you think that that's a sandbag 70%? Because the way I look at it is like, I think that is a baseline, unless there's some sort of force majeure, like some sort of issue associated with being able to deliver. Like, the baseline, I think, is at 70%, and they're going to be able to work to be able to get more of that capacity online.
Oh, exactly. That's what I think. I think they see visibility into 70%, and he is going to push for much more. So I really do think that they will be able to deliver on at least 70% growth next year. What might end up turning into $700 billion of revenue next year on potentially 73% gross margins. And then the stock sells off on the idea that we've went from 75 down to 73. And it's like, but the estimates were 44% growth.
Yeah.
So if you do 75% on 44% growth or 73% on 70% growth, the end result is much higher in the latter equation.
Do you think people are being skittish about? I know that this was a bit of a talking point in the Q&A, and I didn't get to listen to the entire call, but I did listen to all the Q&A, and you guys did a phenomenal job covering, by the way. Was I on the treadmill at that time? It doesn't matter, but I did listen to you guys.
True goat.
And what was I going to say? Basically, the talk about memory having to be passed on. So I think that that's something that is going to continue to be a topic of discussion every 6 months. Yeah. Because I don't see the constraint with memory going away at the moment. And I think you're right. I think maybe people are being a little skittish and undervaluing it because of that potential risk. But I don't think it's enough where you should only be valuing this company at $5 trillion. And then second, the gross margins are still hanging in there really well because they're able to pass that on. So I think it's very interesting. I think the cycle, the thing that's interesting to me is we're in such like a smooth point with respect to like everything is accelerating in terms of growth, even if you're racing to the bottom in terms of price per token, but growth is still growing astronomically. So like I was having this conversation with somebody, I forget who it was. I think they were trying to present a bearish argument. And I'm like, even if on an annual basis, your price per token decreases by 20 to 30%, your growth rate is way more than 20 to 30%. A lot of times when these companies are reporting numbers comparatively last year to this year, the amount of token usage is up at least 5 to 10x, and sometimes even more than that. So if you think about that in terms of how much revenue generation is going on, even if you cut 20, 30% for even your frontier models, one, you're coming out with new models that are going to be priced probably at the premier pricing. But even if you aren't, and say only using, say, Claude 4.6 or Opus 4.6 instead of 5, and it's 20, 30% less than it was last year, the amount of usage is going to go through the roof by, I would anticipate, another 4 to 5x between now and next year. So overall, your revenue generation is going to continue to skyrocket. So I think we're in a smooth point now where we found a good spot for the GPU sales. 45 to 50,000 per chip seems like a good spot. I just hope that we don't get to a place where, let's just say, a TSMC or another foundry decides to just triple capacity. That's the point where it's just like, okay, now you have the ability to make so much where the demand maybe can catch up for a little bit, but it's going to be synonymous to when Amazon was putting $40 to $50 billion of capex into warehouses in 2021. And once we got to 2022, when things started to open up again, the e-commerce sales started to tail over and get back to the norm. There was still a massive growth rate with respect to how much usage was going. And it went from like 11% to 12%, pandemic up to 20%. And then it started to retrace back down to 14% of total US e-commerce.
Careful with that arm, Elon. You got to relax here. I'm just watching you do it over and over and over.
Oh gosh. But if you think about it in that respect, like if we're able to steadily bring on capacity, I'll do this. Steadily bring on capacity. It's going to be much better than if you were to say bring up a massive amount of capacity and then unfortunately, anyway, I lost my train of thought, but I think everyone's following.
I'm
the
sorry,
Jeeps are coming back.
No, you're the best. It's so funny because I find myself doing that because literally what we talk about all the time is stocks going up and to the right, and you're demonstrating those growth rates, and then I'm like, yeah, I got to be very careful. Yeah, sorry. By the way, speaking of Elon, I'm actually having Farzad on the channel later on at 3 p.m.
I thought you were about to say Elon. I was about to say big announcement.
Yeah.
But Farzad's a good second. So
yeah, he's that's good second place. Maybe even first. But he obviously covers SpaceX quite closely. And I'm curious from your perspective, what type of questions that you would have that potentially I don't have the insider the ball knowledge that you might.
With respect to the launch business or how they're diversifying into the other businesses?
I guess both. I mean, that's definitely one of the questions that I was going to ask is just in terms of, should I even consider this a space company? Like, or am I just buying a really big neo cloud?
Yeah. That's the tough part where I try to understand as well. And what kind of capacity, because like, at what point is the growth vector, the thing that I'm trying to wrestle with, because it doesn't just pertain to SpaceX, but also obviously now pertains to Rocket Lab, because Rocket Lab has also talked about how what SpaceX has done with respect to the space element part of their business, they're trying to emulate, not entirely in terms of like Starlink, because Starlink is its own beast, and there's going to be some synergies associated with what Rocket Lab's constellation is going to do with what the Starlink is doing, but they're also disparate and different in terms of what their objectives are as well. But they like the fact that they have this launch capacity and launch capability that allows them to launch constellations into space. And I would think about the question that I have is SpaceX is ramping down in terms of like last year. I think the Falcon 9 probably hit its peak in terms of the amount of launches. I think it was like over 100 launches or something last year. Massive amount. It's like once every 2 or 3 days they were launching something, sometimes multiple times per day, depending on where and how it just happened to transpire over the year. But this year they're actually probably going to do less launches. And I think a lot of that is because they're only really focusing on now only launching for Starlink.
Yeah.
And I think, I forget what it was last year, but it was like 60% plus or something of the launches were for Starlink. Well, we're in a
versus
place
external customers, you mean specifically?
Versus external, exactly. For like NASA or sometimes even Rocket Lab helps, with some of the contracting. But the thing that I'm kind of curious about for Starlink in general, those are the V2 satellites, and the V3 satellites have to be launched with Starship. And so we're in this kind of transition period of the current Starlinks that are going up are V2. The V3s can't be launched with a Falcon 9. And so I would want to discuss like how much of that revenue is being generated from the Falcon 9, because that business seems to be, one, decreasing in terms of external commercial, and then two, like how much residual revenue, because the Falcon 9 is not going to retire tomorrow because of the fact that they have to still supply the space station. Mm-hmm. And that is a huge contract, and it's like almost for national security at this point, because Starliner from Boeing shit the bed. Sorry for like harsh language, but it really just shit the bed. And until you have like a Neutron rocket, which has human launch capability, but it hasn't been tested for it yet, but it's been designed since day one to be able to potentially participate in those sorts of contracts in the future. You don't have that up to speed yet. So I'm curious how that revenue changes in terms of being able to provide. But at the same time, I know that's not going to be a large driver. A large driver is, like you stated, the Neo Cloud piece of it. So yeah, I'm not 100% certain how to 100% think of SpaceX at the moment, because it seems like a company that's almost in its own transition. You can't just think of it like as a strict space play anymore, because they're bringing on Neo Clouds and Grok, and and everyone's talking about Grok. Steve was just messing around with Grokbot. He just showed me something that he was building in the background. So
does it look good?
It didn't look bad. Yeah, right. It looked like he's built a couple things on Claude, which some are phenomenal that he's been able to build using Claude, and then other things I think he's a little bit disappointed. And so I think he's trying to build the things that he was disappointed about, or the things that he's just curious if there's a tweaking that could be done by moving over to Grok. And it looked pretty good. So I'm kind of curious, because he's the one that I haven't really done much with Grokbot at all. I'm curious how he gets on with it. So I'm going to try to follow that a good bit.
Yeah, I think Anthropic has been so supply constrained that they're throttling their customers. And there's been some reports and like source code talking about like the reasoning level that they want for if you put it on like high or max in their case, that it's actually much lower than where it was before. They used to like rank it out of 10 or something like this, or out of 100, and it used to be at like 70-80% in terms of the reasoning. Now it's like closer to 10%, which was like the models that were expected that were much lower. But they're subsidizing tokens. They are taking on every new customer. You saw Kimi K3, the second they ran out of new or out of capacity, they just stopped taking new subscriptions. Anthropic would never. So, yeah. You take on more subscriptions, you get a worse product, unless you can find more deals like SpaceX and buy Colossus 2 at a much higher rate than market like spot rates. That I don't know, they're struggling from their own success in a way, and that allows for products like Grok and ChatGPT to really start to build up a user base. Would you be interested in that IPO, Anthropic? I'd have
to see the numbers. I mean, the thing I'm most curious about is, All In talks about them quite frequently, obviously because of the fact that they're potentially pre-IPO and their S1 is imminent. I'd be
Dario
curious
is
how.
quite the figure for sure.
What's that?
And Dario Amade is quite the figure as well. He says some pretty outrageous things.
Yeah, so that being part of it as well. But I'm curious to see if their ARR, annual run rate, continues to go as expected. I mean, people next year were, I think right now they're thinking they're close to 100 billion or something annual run rate, and growing potentially an additional 4 to 5x next year, which would put them at potentially 400 to 500 in the next
That's
12
all
months.
In's belief.
That's all In's belief, exactly. Yeah. I mean, yeah. I'm just like, I mean, going from tens of billions to 100 billion to then being 400 to 500 billion within the matter of 24 months is pretty insane. But then you hear the discussions about Google's token usage, like from when Sundar talks about how many quadrillions of tokens are being used on an annual basis.
Yeah,
it's like, well, and they're growing at a substantial rate. So I'm like sitting there like, who am I to question when these guys know firsthand way better than I do? So I don't know. I would have to look at it, and if it sells at a price to earnings of less than 100, when it kind of IPOs, I would probably be inclined to potentially buy into it, because I'm sure there's other businesses that have yet to be tapped with the potential. And I do think that there's an opportunity for a lot of these companies, similar to what Palantir does, to own specific workflows for specific industries that can really help unlock a tremendous amount of value for particular companies. And if also, I think one thing that hasn't necessarily been done as of yet, it's been done at, say, the Google level, the Amazon level. When you talk about these TPUs or these CPUs or these ASICs that are specifically trained for specific algorithms and for specific sort of workforces, I think that there's an opportunity for companies to dive into that a little bit more, like the Googles of the world, or maybe even the Trainiums of the world. Like, I think that is a potential where you're saying, okay, we have this specific workflow that we do, 1 billion times per day. Can you design a chip specifically for this? And people might pay outrageous sums for research and development purposes that I don't think is necessarily done at the moment. And we talk NVIDIA. Sorry, I'm like in a flow state, so I'm just going to keep talking. The Jensens of the world were talking specifically about like how their chip is very general use and has a lot of applicability across the entirety of the spectrum.
Yeah.
Versus like I'm trying to be cautious of my hand movements again. Of course, the Trainiums of the world and the Google TPUs are more specific for specific functions. So I'm very curious to see if there's a deep diving where specific companies will develop chips for, let's just say, oil industry companies, for seismic, or for algorithms on Meta or YouTube, or, and maybe they already are, and I'm just, so behind the times.
What was crazy is no one really believed that. Probably 4 years ago or so, Jensen probably talked about specialized tokens and the different costs for different tokens, and no one really believed it. I think at the time, or at least there was a large swath of skeptics, and now you're starting to see it, like TPUs being essentially built with Gemini in mind, and the jalapeno chips of OpenAI going to be very similar. So I don't know. It is quite interesting. It's there was a part that I wanted to touch on. 100 times price to earnings. I think it's going to be closer to 100 times price to sales, to be honest. I think revenue last quarter was something like $11 billion. But that is at an insane growth rate. So we're probably going to see something like trailing 12-month revenue be somewhere closer to probably like $30 billion, if not less, maybe 25 billion. And at that pace, you're looking at what?
2 trillion, 2.5?
80, Yeah, but I think it's going to be a 2 trillion IPO. So if that's the case, or 2.5 trillion, you're either at like an 80 or 100 times price to sales. Pretty wild. And I mean, there might be some operating profit, but after everything, I don't know if we end up seeing that on the bottom line.
Yeah, I don't know.
What does Anthropic's tax rate look like?
Jalapeno chips do sound delicious.
I know. It's very well named.
Have you ever had fried jalapeno chips? They're actually really delicious.
Yeah, I can do that. I can get down with that.
Unfortunately, I do have a franchise call at 1. So 2 your time. So I only have 9 minutes left. Is there anything in particular that you wanted to kind of cover? Somebody's asked about memory. I do have a private placement in memory. I can't talk about it maybe until it's fully closed. But hopefully in the future I can talk a little bit about that. But I don't have any. I did have a short few when we did have a dip in Micron, I don't know, a month or two ago. I took an opportunity to do some spreads on that, and I made a little bit of money on that. Nothing huge, but enough.
You think that Micron can get anywhere like $2,000 a share? I think that
honestly, I'm surprised it's staying below 100. Maybe it's. I think from what I heard, my one
below 1,000
coworker was saying that memory seems to be pulling back today. Let me see, but I'm just honestly surprised it's not above $1,200. I mean, it just seems like at the moment that things are continued to transpire with respect to the demand of these chips. You have NVIDIA trying to raise prices to be able to pass on, to be able to continue. So I guess we'll find out in 2 weeks what it looks like with respect to Micron, because I think they report in about 14 days or so. But I'm just kind of surprised that it's not continuing.
Is it we're not even that far away?
I don't know.
14 days away from earnings?
The 30th. No, never mind. I'm a dumb. It's almost a month.
33 days.
30th? That's insane. But I mean, $30 a share, right? So I mean, you're talking about a company that on a rolling 4-quarter basis is going to be making $120 in earnings per share. Like that's pretty crazy.
That rolling 12 comes with no growth, which is likely not what's going to happen.
Yeah, like I still think that you have potential to have an additional 30 to 40%. I mean, I don't know, not enough, but I wouldn't be surprised if next year you see at least 30 to 40% growth, and I wouldn't be surprised if it's much more than that either.
Yeah, we got a lot of amazing earnings next week. Any of them that you're interested in? We've got Palo Alto Networks, Dell, Credo, MongoDB, Broadcom, Snowflake, UiPath, Lululemon.
I'd be kind of curious in Broadcom. I held Broadcom for a couple months. I think I sold maybe for plus or minus 1 or 2%. I mean, it wasn't anything where I made a lot of money. I trimmed it because I wanted to potentially just consolidate. It's just one of those things where I have my core 5-6 companies, and then anything beyond that, I'm always just looking to like, am I actually going to grow this? And I had a couple. I don't even know if I had 100 shares of Broadcom, but I think I only had like 50, 60 shares, and I was wondering if I was actually going to grow it to be, a couple. You know how I'm trying to get Amazon to 1,000 shares. I'm trying to get Microsoft to, 500 shares, like something that actually has some substance. And I just didn't see it. So I'm kind of curious if I'm going to regret selling Broadcom, because they're in a different space than what NVIDIA is doing. So.
Yeah. No, dude, that makes a lot of sense. I own a little bit of Broadcom. I'm excited for it. And very, very excited about Dell as well. I think that one's going to be huge, but we'll have to wait and see. I don't own any of that name. Only SMCI in the draft. That's it. In terms of the rack names.
You've been doing well on that one.
Steve's catching up. Steve's doing well. All right. I'll let you get going. I know you're a busy man. Matt's always making money.
The only thing I guess I would want to disclose publicly is, as always, I got paid early yesterday, so sorry for the folks that came from Steve's chat, but instead of waiting until Monday the 31st, since I got paid early, I made all those buys today. So my Next Decade, Venture Global, Rocket Lab, Palantir, Microsoft, Amazon. I'll probably wait until Monday to buy more Bitcoin and Ethereum, just because I'm not as much of a rush for those things, and hoping it actually retraces from here. But there was a few stocks that were kind of down, like Rocket Lab being down. I was like, you know what? I can guarantee that it's down today. I can't guarantee it'll be down on Monday. So
There you go.
might as well get the buys in. So as always, twice a month, every time I get paid, always got to pay myself first. So
Yeah, that's important. Yeah.
okay.
All right, brother. Thanks for jumping on.
Yeah, thanks for having me on, brother.
Appreciate the time.
Cheers, bud.
For the next thing, what we're going to be looking into really quick is AFFIRM earnings. We are looking at Max Levchin right now on CNBC. He did a quick interview as well. So let's go ahead and jump into that really quickly. And then we can continue on with the rest of the show. Farzad will be in an hour as well.
Shares of AFFIRM are surging on better than expected results. Joining us now, AFFIRM CEO Max Levchin. And Max, I guess I would just ask you, what's the best environment for doing what you do for people with the buy now, pay later? Is there something? Are you in a sweet spot right now in this, what people constantly call K-shaped or affordability crisis economy? Does that just play into to what you do?
Yeah, I'd like to believe we are a product for all seasons. Obviously, anytime someone is thinking about money, they're trying to figure out how to get the most out of it. They're stretching their budget. They're contemplating a purchase that is noticeable to them. We believe, certainly we're biased, the best possible tool for that. We give you full transparency. We give you a plan that shows you when you're going to start and stop, when you'll be totally out of debt, whether that's 6 weeks or 6 months or longer. And we're completely transparent with whatever the true costs are, and they do not change. Whatever it is you agree upfront to, you will pay us or less. We reward prepayment because we love when our consumers are financially responsible. And in times of inflation, we see more demand because folks are budgeting. They're more thoughtful about how they want to use their money, and we're there to help. And in times of faster growth in the economy, more feelings of abundance, people come to us for more discretionary purchases. So we see demand. I think we're growing for 30+% for the last 11 straight quarters and showing no signs of slowing down. I think we'll be here for all economies.
And the ability for a consumer to be able to do it through AFFIRM it must be so attractive that merchants are willing to farm it out to you. They'll sell more stuff and they'll share with you what are pretty slim margins a lot of times. That surprises me that it's that positive for them to bring you in.
That's exactly right. Merchants do love us, and we are a network. That is to say, as more consumers show up to merchants saying, hey, I'd like to use AFFIRM to buy this, merchants hear their customer feedback. They turn to us. As we show up at more points of sale, more consumers learn about us. More consumers say, wait a second, that's a fantastic alternative to what I got right now. And they use us more. And so the flywheel keeps going, and that's what the growth comes from, really. The sharing of the margin is a really good point. So merchants love the idea of not discounting because the price should be the price instead of telling you the price will be maybe 10 or 20% off over time. The typical incremental margin they pay us to offer a 0% loan, for example, to consumers, is a fantastic deal. Doesn't matter if you're independently wealthy or trying to make ends meet, getting a 0% loan or 6 months, 12 months to buy a thing that your family needs is an unbeatable deal, especially with no late fees, no deferred interest, no compounding interest. So that is what the merchants share with us. The majority of that money comes to the consumer in a form of no interest or a reduced interest. They are paying for it a lot less than a 10% or 20% discount. So it's actually a great deal for merchants. And we love working with them on these extraordinary 0% deals. We just did this event called the Big Nothing, which is where lots and lots of merchants all pitched in to offer these 0% deals to our consumers, and went off really well.
When rates go up, I would figure you'd be more attractive to people to use. But then again, does your opportunity loss? Does that? I mean, does it? You could be making a lot more money if when rates go up, right? If you were able to try. How does it? What would you said you're good in any environment, so you don't care whether rates go up or come down. Isn't it worse if rates are headed higher for you?
We're not a depository, so we eventually fund our book through relationships with many different funding sources. We very successfully lived through the last round of rates going up, and so I think at this point the market has very ample demonstrable results to show that as the rates went up, our results didn't really change very much. So we have contracts with our financial suppliers, if you will, that are long-term. We're very thoughtful about how we stagger the timelines. And so as the Fed moves the rates up and down, our ability to operate is really not impacted all that much in the short term. And in the long term, we're really well planned. But in terms of profitability, I think if you compare us to our peer set or just about anybody else in fintech, we're quite profitable. If anything, the theme of the last couple of years has been this sustained profitable growth. We're not just growing at 30% plus year over year. We're posting very, very healthy margins. We've been profitable for 12 months and only showing better signs.
Just as a neophyte in all this, I was asking my mentor Sorkin exactly what how do you make sure you're not getting a bunch of deadbeats? And he said you have a way.
They've done a masterful job.
How?
But you can ask Max how they do it. But they've done a masterful job of sort of rewriting the idea of a FICO score, even.
Yeah,
that's right. Thank you, Andrew. That is the core DNA of the company is sort of based on fundamentally two ideas. We can underwrite each consumer better by getting a little bit more data, being smarter about what we use, asking for a little bit of data from merchants, essentially just getting smart about data. And these days, I think that's actually easier to understand for most folks, just given how AI has expanded people's minds of what you can do with data is extraordinary. And we've been at it for 15 years. We were an AI company when AI was kind of what does that even mean? The other thing that's really powerful about our business is every transaction is underwritten separately. So each time someone comes to the point of sale, because we can do it in real time, because we can do it so quickly, we actually say, wait a second, is this still a good idea for you financially? Part of why we don't charge late fees is to create a perfect alignment of incentives. If you are going to be late, if our models tell us you're going to be late, we should not be lending to you. We'll just lose money because you will not be able to pay us back. And so we will very politely but very firmly tell you, we're so sorry, but the answer is no if we don't believe you can pay us back. And we'll take more data and we'll reverse our decision if we suddenly realize that we're made a mistake. But underwriting every transaction really helps us keep our credit results exactly where they must be. And we've been doing really, really well there, highly consistent over the last many, many years now.
and you must have a pretty good idea about whether you're seeing stress on any of the with any of your customers. Is it increasing, or are we okay?
So the AFFIRM consumer is healthy. I mean, the thing that's worth knowing, as big and great as we are, we're still a sliver of the US economy. And because we underwrite every transaction, we have a lot to say as to how our consumer is doing, because we invite them in when we say, yes, here's a loan for you at this point of sale. US consumer undoubtedly sees the higher gas prices, so can't ignore that. They're also coming to us to help manage those prices across all the various inflationary points. But so far, so good. US consumer or AFFIRM consumer is paying us back on time every time. And, in that sense, I think we're doing very well.
Okay. Amazing.
I'll end it there. I've always been interested in AFFIRM. I've never pulled the trigger on this name. I know people I see some comments about how dangerous buy now, pay later can be. I got more interested in AFFIRM whenever the merchants were covering the interest rates. Back whenever I was looking into this company, I was trying out AFFIRM on their 0% interest thing. Like whenever I bought my phone, this was paid for by AFFIRM, and Samsung ended up covering the interest for me. You know, I paid the phone out over 2 years or whatever. It was like, I forget what the actual thing was, but I was like, okay, cool. I'd rather the money in my bank account than in theirs, you know? And I was earning interest. So it was like a huge win for me. And I think that for that way, and by far their biggest customer at the time of whenever AFFIRM became or got really big was Peloton. Peloton would cover the interest, and the consumer would have a way to buy an expensive item, you know, over a longer period of time. That way makes sense to me. Now people talk about you know, buying a burrito through Chipotle on buy now, pay later. And they're doing this with interest, and they know the rates and they're signing up for that. And that's where it gets kind of dangerous, not just for the consumer, but just the general discussion around it. Like this is consumer behavior is doing this. They know exactly what they're going to pay, and they choose to pay more for their burrito later. It is insanity. Like it's wild. So yeah, that makes me a little bit worried. But in terms of not just consumer behavior, but just the general business, Max Levchin is potentially one of the greatest fintech founders. And I truly believe that if he was still behind PayPal, PayPal would be one of the largest, you know, financial tech companies in the world and would not have died off. I mean, I'm talking hundreds of billions of dollars, not 40 billion or wherever it's trading today. So there is a huge amount that you need to put on founders, on the leader at the helm of the business, and Max Levchin is that. So that's what's always kept me interested in that business, and that's why you see a big differentiation between AFFIRM and Klarna. But obviously, it's in a interesting. Yeah, people don't know this. Like for the people who do follow Max, like he really is a legend. And yeah, he's not given enough credit because he's not in a space that's fun to watch. He's not putting rockets up in space. He's just handling, you know, small loan debts. But he does it very, very well. Okay. Let's see here. So another thing that's happening that could end up affecting AFFIRM, like they talked about in that interview, was where the decision for rates is going to go. Now, Jackson Hole was earlier. Warsh, obviously, there as the Fed chair. And it's looking like we are going to see potentially more hikes. A lot of commentary around hiking rates. Even SoFi said they're now expecting 2 rates by the end of the year. And that's really what is coming up to see. So roughly 10.9% chance by end of year that we have no rate change. This drastically shifted. Practically yesterday, we were closer to about 30%. So this has got cut way down. A chance of 1 rate hike currently sits at 38% chance. 2 rate hikes, 39.8% chance. And even 3 rate hikes is higher than the chance of no rate change at 11.2%. So the rate hike decisions can negatively impact SoFi. That's why you see that company down right now. That's why you see many of the fintech names. AFFIRM just put up unbelievable earnings, but still it would be a negative impact in their business because they have to resell those loans. This is not for September. This is for December of 2026. This is the full year guidance. For September right now, we're sitting at a 42% chance of no rate change and 57.5% chance of 1 rate hike. But I'm looking out all the way to the December meet, which is really where a lot of these companies like AFFIRM and SoFi are guiding to. AFFIRM is still green, yes, but it was up like 14% yesterday or something crazy like this. They were skyrocketing in the pre-market or the after-hours market of yesterday because of how well that their earnings truly did come in at. Yeah, I think after today, there was definitely some Warsh doves that I believed, or that believed that he is just going to follow what Trump says. And what I honestly think Warsh is going to do is really make it an independent Fed. They're going to do what's right and base it off the data and the, quote unquote task force that they end up seeing. And if that ends up signaling that, a rate hike is what we need in order to control inflation, then yeah, he seemed a little bit more hawkish and the market's reacting to that. It's yeah, Marcus said it here. It's just a little bit of cold water on the party right now, but I don't think it necessarily spells doom for the long-term growth trajectory in many of the companies and industries that we follow, like artificial intelligence and the semi build-out. Yes, rates would impact the large amounts of debt that these companies are taking out, and that can be concerning as well. But hopefully, as we see Google up here 1.8%, it's not going to affect the big names too much. CoreWeave, on the other hand, down roughly 3.5%. Gotta have water sometimes, not just soda. Gotta have some cold water. Can't always be on a sugar rush. The Farzad interview is going to be at 3 p.m. Eastern Standard Time, or about 50 or so minutes from now. That said, let's go ahead and check out if there's any new news stories going on right now. For the most part, it's decently quiet during midday, but we always end up seeing some sort of interview, like the Alex Karp interview, or Trump coming on to say things that can definitely shake some things up. Speaking of which, we have a very, very popular video here. Oh my gosh, wow. We will have some sort of debt crisis, just says Harvard's Ken Rogoff. I don't know if he's a professor or whom this is. Let's go ahead and have a look.
Introduce our guest here, Harvard economics professor Ken Rogoff, frequent guest on Squawk Box, former IMF chief economist. Thanks for joining us, Ken.
Hey, thanks for having me.
So I'm going to make an observation since I've been here for a couple decades. I don't remember a time when the bond market was so important to what was the discussion on monetary policy here at Jackson Hole. It feels a little bit like we're having a backyard suburban barbecue and a motorcycle gang showed up.
Huh.
And it's really influential. When you look at what's happening now, some people say it's just a temporary blip. What's your thoughts on the higher yields right now that the U.S. is experiencing?
Well, as you know, I've been writing about this for 15 years, that if you look at the history of interest rates, they're low sometimes until they're not. And this is something we always should have expected. But there's been an overwhelming thrust at this conference, because it reflects academics, of low forever. That I think there was even a paper last year about how they're going to get the real interest rates going to go down and down. And that's, of course, very important to the central bankers, because they're seeking an interest rate that will have, neutral inflation implications. Where is it? And they'd like to believe it's a science, but, in fact, it's very hard to predict.
Let's take it apart a little bit, because we all know there's different components to the interest rate. There's an inflation component, there's a growth component, there's a term premium component. Some people say, hey, this is just reflecting, or there's a supply and demand component, of course. Some people say this is just reflecting higher growth expectations.
Yeah, some of it. I mean, certainly the AI build-out's big, but it's also the Iran war, populism around the world. I mean, it's not just what the United States is doing, it's what everyone's doing. But the honest truth is that if you look at trying to explain the inflation expectations adjusted interest rate, the real interest rate, it's very hard to explain. And they've had papers here explaining where it's going to be 100 years from now. We can't explain why it moved the last 100 years. I mean, an example is people say aging means the interest rate's going to go to zero. There have been many papers on this here. But if you look historically, that doesn't work.
When you think about what's happening right now, how much is this supply-demand issue? It really didn't seem like it was, the yields were really that much higher until it became clear how much the AI companies were borrowing, and it was a debt story, not an equity story.
No, I mean, interest rates, real interest rates had risen dramatically a few years ago at this point. Like they were actually at a little bit higher levels at one point. They're slightly below the peak. So it's many things. Yes, it's AI. Yes, AI is amazing, but you've talked about it a lot here, but it's not all growth. And if it turns out to be growth, the interest rates will go up even more.
What's your reaction to what the Treasury announced last week? Part one was when they said they were going to increase the buybacks. Part two is our reporting that they might use the TGA to do so.
Yeah, well, look, I mean, there's this discussion that is he stealing something from the Fed? Is the Treasury encroaching on the Fed's territory? And I think the fact is, if you go back after the financial crisis, it was the Fed encroaching on the Treasury's territory. Maturity transformation, how much of your debt is long, how much it is short, is fundamentally a Treasury decision. What risk do we want to take? And people don't all understand the Treasury owns the Fed, lock, stock, and barrel. So it's like, you have your son making the decision for the family of what you're going to be borrowing. So there's a transition. The thing that Besant fumbled is he did it as if he was making the bond market go down because he's doing that and magically making it change. And he said it in the context of interest rates were going up. So that was botched. But I think the principle is fine. And I think Kevin Warsh, if you go back to his speech at the IMF a little over a year ago, he's fine with that, of having the Treasury take over the longer term trajectory and the Fed do the firefighting.
I was going to say, it sounds like you agree with Kevin Warsh about the Fed stepping back and letting the Treasury take the lead on this issue of debt management, duration, all that stuff. It sounds like you would support a smaller balance sheet at the Fed.
Absolutely. I completely agree with Kevin Warsh on this. I mean, you have to change the regulations. People say, well, the banks want all the Federal Reserve debt. That's because regulations were passed that made them want it. It's a little more liquid. You can trade the Fed debt, any 24/7, but the amount they have, they don't need that kind of liquidity. But it's not something you can do overnight. And again, Besant fumbled it a little bit here. I mean, and of course, we'll see if Warsh says something about that, not about Besant fumbling it.
Right.
I wouldn't be surprised if Warsh reprises what he said at the IMF a year ago about mission creep. Let's get back to our knitting.
Let's go sort of more on the higher level here. How much should people really be worried about things like the U.S. debt right now being at 6 or 7% of GDP in peacetime?
The deficit.
The deficit, sorry. And how at risk is the dollar as a reserve currency, in your opinion?
Well, I mean, long run, China's going to get a bigger share of the market, and the euro is, because we impose sanctions all the time, and Europeans are worried about Greenland and Iceland and China, Taiwan. But, the biggest threat over, say, the next 5 to 10 years is from the inside, that we just aren't prepared to balance our budget. We're rich. We were always rich. We could afford to. I have theorized and said in my book, Our Dollar, Your Problem, and many writings, we're going to have a crisis because the voters won't allow anything else. They won't believe you. You can't get elected. So I think we will have some kind of debt crisis, financial repression, inflation, maybe something more dramatic. We might not be the only ones, the UK, France, Belgium. But yeah, I think it's coming, not because it has to happen, but that's true about every debt crisis. Argentina, when they defaulted, when I was at the IMF in 2001, the Argentine citizens had more money abroad than the Argentine government owed.
It is truly, I mean, maybe you can say we're crawling towards it. Maybe some would say that we're sprinting towards it, but it does seem like this party can't go on forever. And you know what? I think that there's going to be some people that definitely believe that we can outsprint this debt crisis that is looming and definitely growing. But the truth is that the politicians that will be elected over the course of that growth will likely increase spending and continue to make things worse. It's the insanely hard part about this problem. The boom in growth that we're having even right now causes supply bottlenecks and then prices to rise and then inflation in consumer goods. Like, look at memory, what that's doing to iPhone and Android prices in consumer electronics. And then so people will once again say, hey, it's impossible to afford these regular consumer goods because prices have risen. But those are the same, the reason why they're rising is because there is a productivity boom, but then that's going to cause a continuous debt spiral. So I truly don't know how we get out of this. I think maybe even the smartest economic minds, like what Kenneth just said there, was at some point we're just going to hit a hard wall where we're going to say enough is enough. But no politician can ever. So it just has to come to some sort of collapse where investors just see every red flashing sign and take their money out of the United States economy. Like it's. I truly don't know. I don't know. You can be, and this is the hardest part about investing. You can be thematically correct in, and you can say vote better. Like I completely agree. You're not going to get the average person, especially the people who rely on the stimulus that is causing this problem, to ever vote against their own stimulus. Every individual person is a capitalist in the way that they want what is best for themselves. And a lot of people have gotten themselves into situations where what's best for them is government support. And if I was in that situation, I would be voting for the person that is going to give me the most amount of government support, because that's what's best for themselves. They're not worried about the long tail effect of the United States economy. They're worried about paying rent next month. They're not worried about my asset prices on, like, they're going to go towards, free grocery stores and free transportation and all of these things that are great, but cost money, cost real money that only then exaggerates and puts more fuel on the fire. And it's just, I just can't ever see a way where this doesn't just continue to spiral. Even as we see productivity and growth, people are just, the people on the lower end of that K-shaped economy are going to say, all the rich people have these insanely nice robots. Why don't we have government-supported robots in our houses? People are complaining about iPhone prices as if there's not another alternative to the next generation of smartphones. What's funny is you see people that say, like, Tanner for president or preach or something like this. The problem, there's no answer. Like, everyone sees the train coming and there's nothing to derail it without everyone on board that train getting severely hurt. And there's no voting for self-inflicted pain. No one's going to vote for that. And so it's just, I'll go back to what I was saying earlier. We can be completely right on the themes that we're investing in, on the technology booms, on the productivity gains, and the greatest looming fear is the tide, meaning what amount of money even wants to be invested in United States economies. If there's a debt crisis, if there's even the effects before the large debt crisis, rising bond yields, all of these things, because the belief in the United States being able to pay back that debt without just pure hyperinflation in order to do so just allows people to realize, hey, these are great investable assets at really cheap prices, but we don't want to be involved in and around that geography. Look at Nubank. There's no way Nubank and Mercado Libre are some of the cheapest assets that you can buy, but there's a looming effect that, hey, I mean, at the end of the day, you're buying into companies where the underlying currency that they're dealing in is the Brazilian reals. And so the overall PE is just way, way lower, even at the amount of growth that they have. These companies are still trading at 15 times, less than 15 times PEs, because you just don't want to be a part of, high risk geographies. It is terrifying. Okay. The United States will never pay off the national debt. They will default. It's just a matter of when. Yeah, I mean, maybe, I don't know. I don't know. I mean, you might be right. But it's not like there's not, like, I don't even know where the safe haven is. Okay, the United States is going to default. Do you put your money into Canadian assets? Like, they have a great currency? Do you buy into Chinese economies where a lot of their industries, which are growing, are being extremely stimulated? Like, where's the safe haven? And I think that buy property of a country that's going to default. That makes sense. Gold, maybe. Yeah, maybe gold, maybe Bitcoin. Yeah, it's but I like productive assets, so maybe it's land. I don't know. Pokemon. No one's talking about the world imploding. I'm not suggesting that the world implodes. We're talking. I'm not suggesting that at all. But to think that there's never been a reserve currency or a leading economy which has changed hands, like, that happens all the time. I mean, not all the time, but it's what was it? I forget what was Spanish to the Dutch, Dutch to UK, UK to United States. Reserve currencies have changed hands a number of times. Usually almost always under large war, by the way. It seems like the countries that have reserve currencies never go out without a fight. A little doomerish, but I'm just saying that is like the doom commentary. Okay. US 11th provinces? Are you suggesting Canada takes over the United States, in which Canada has 13 provinces? Tanner, why are semis going red? Well, a couple different things. I think that IREN spelt a really, really bad story for neoclouds. And then on top of that, Palo Alto CEO just randomly came out and said, hey, by the way, guys, just to remind everyone, these companies suck. So he came out super negatively about a lot of neoclouds, and then IREN proved them right because they said CapEx was going to be in line of $25 billion, and they showed $130 million. Now, that might inflect next quarter. Okay, next quarter is really the make or break, and you're going to see this company hit extreme lows if they don't end up seeing that inflection next quarter. But that being said, it is a stark contrast between CoreWeave and Nebius. So you're seeing all the really, really small names, the boost runs, the hyperscale data, IREN, a share in AI. All of these names are down largely. CleanSpark, okay? SmartBird AI, all those names are down. And on top of that, then you have Jackson Hole, War Speech, quite hawkish. You know, the potential for rate hikes coming is also another concern. So just general macro, specifically in the industries of data centers, for which there were reports from the information that said that NVIDIA is going to stop their revenue sharing. If they're stopping their revenue sharing, maybe they can't give great supply to the companies that are less trustworthy, which are the Boost Runs of the world and the Allbirds of the world that, you know, don't have the credibility to make these data centers and also don't have a lot to offer NVIDIA in the way of large purchases or, you know, splitting of overall revenue streams. So those are concerning. Now, NVIDIA has come out and denied those allegations, saying that they are still doing the revenue splitting, but I think people are believing that, you know, they're probably not writing this based on nothing, and that there might be some talk about removing the revenue share agreements after just 2 months after they essentially went live with this idea. Evan says you should buy LEU. I might. I mean, energy is definitely an interesting sector, even outside of artificial intelligence. It's like it's just the currency of energy is a pretty diversified space to be in. Do you believe that the economies are going to be more productive over time? That's kind of like the bet, I guess. I guess. It's also quite interesting because a lot of those industries, for the longest time, people have been talking about like, hey, well, will they be able to build out fast enough, or will there be a major bottleneck in energy? And whenever you have large buyers, it's so funny how quickly, you know, these businesses can put up new supply whenever there are huge price tags attached. Whenever you have customers that are asking for gigawatt scales of whether that's grid power, solar, wind, you know, you're looking at Bloom Energy as another potential cleaner option on site, that you really start to see the ramp up in energy quite quickly whenever there's real customers here to buy. Okay. Let's see here. If they raise rates, then they want a crash. Well, the truth is the Federal Reserve shouldn't care about asset prices. That's not their mandate. The mandate by the Federal Reserve says that they need to keep inflation in line and they need to keep jobs healthy. And the reason why they haven't hiked already, because inflation has been out of whack. They've been due. If you were to say that they were a sole mandate, that's the only thing that they worried about, we would have hiked a long time ago. But there is the concern about jobs. So rates have stayed steady for an extremely long period of time. Actually, like quite long, with no change. I think it's been like 7 meetings, longest time in a real while. But that being said, the goal is not to make sure that asset prices are high. But that's also why it's a little bit different. Like whenever Trump says that we need rate cuts, is he might have a different objective. You know, healthy stock markets means people have booming retirement portfolios, quite happy. It's not just for the rich investors. It's most of the working class that sees where their 401ks are at and where a lot of those asset prices sit, and that benefits them. Also, high asset prices also mean that jobs are usually doing quite well. but that means that inflation could run amok. Sir, my question was ignored. Mamba, I answered your question in the chat. Tanner, would the AI build-out be healthier if NVIDIA accepted lower margins instead of helping customers take on more leverage to buy its chips? The truth is NVIDIA doesn't need to be the arbiter of debt across the entire ecosystem. They don't care. The reason why NVIDIA is a $5+ trillion company is because of their margin. That's allowed them to keep up their research and development. It's a capitalistic society. They charge as much as they can for the services at what customers are willing to pay. They would charge 90% if they could do it. Customers have turned their back at those types of prices. So they're at as high of a price as what customers are willing to pay. That is reasonable. I'm sure the AI build-out would be healthier, but it's healthier for NVIDIA. NVIDIA's books look healthier from charging a lot. Yeah. And by the way, you could say that about literally any business. Like, would McDonald's, would everyone else not only have larger savings in their accounts if they charge less, but also like literally be healthier if they change their menu? Yeah, but that's not their concern. Their concern is, what does their balance sheet look like? Have you played the Sailor AI video yet? He's been posting a lot of these, so I don't know what the latest one is. I don't know what he's posting about these days. Uh-oh. I think this is Tom Lee is in this one.
Bitcoin is the apex property of the human race. It is perfected money. Bitcoin is the best asset. There is no second best asset.
I was in response to a user who put Tom Lee in some of Sailor's videos and just like beating the crap out of him. So I guess Sailor came back. This is the world that we live in now. You know what's funny is like we're in this point where like clearly you can tell that this is all fake, but as the models end up progressing, it'll be extremely hard without just like clearly checking the metadata or what Google's product SynthID is told to do. They work with all the big models to make sure that AI videos are tagged as being AI, and Meta and Google and OpenAI and Anthropic and all those businesses are working with it. But it's going to get to a point where if that metadata is not included, whether it's from some unlocked, Chinese open source model or something that's homegrown by some propaganda-esque machine, which, by the way, that's another thing we need to talk about. That did happen very recently. Let me go ahead. X safety team ended up finding over 200,000. I think they were Chinese propaganda accounts that were promoting the anti-build-out in terms of data centers, spreading all of this stuff, talking about how terrible it is for not only the environment, all of these things. So unknown brand new accounts that are spreading data center FUD. A little bit scary. I mean, the propaganda machine that can be created through artificial intelligence is going to be unlike anything we've ever seen. Yeah, they're promoting anti-AI rhetoric while also doing things like their own, huge pushes in artificial intelligence, subsidizing the creation of, their own version of ASML and memory names. And like they are doing everything that they possibly can with artificial intelligence. And they are actively trying to slow down America. Tanner's hat is AI. I mean, it really is. It's a Google's deep thinking model. But yeah, be very careful what you read out there in terms of who is promoting. Well, that was actually one concern, and why I think Dario Amodei was, I think, promoting his own product by saying that, you know, what we're making here is going to cause job loss. I think that scared a lot of people into believing that they had to use this tool or else they would lose their jobs. And so they got extremely popular extremely quickly because of those comments. For a lot of people, their first time ever hearing the name Dario Amodei was whenever he called for 50% of white collar jobs to be lost by 2026, 2027. We haven't even seen an ounce of that. Not even a fraction. He was wrong by 100%. He was off by 100%. Okay. And yet still, those fears still propagate today. People still push the idea of potential job loss. And he promoted his own product that way, but now it's causing some larger effects that maybe they didn't want to happen. Maybe they did. Maybe they want a regulator to pull the ladder up from underneath them, so then you don't have, you know, kids in their garage of Silicon Valley trying to create the next Anthropic. You just want the biggest names, and you need insane amounts of capital and regulation and large teams in order to just be able to get your startup off the ground, which is truly concerning for any technology or new development. Altman was playing into it as well. I think that he's toned that down, especially after someone threw a firebomb at his house. So like himself and his family were like literally physically attacked. And also, I think that they were just losing a ton of growth. They tried to counter that and talk about how the ARR that Anthropic was highlighting was fake. Very clearly now, as they approach, you know, $80 to $90 billion of ARR, it wasn't faked back at 25 billion whenever they surpassed OpenAI. But yeah, what a crazy shifting and moving economy. It's never a dull moment in markets. We can have individual days where there might not be as many stories, but I mean, in the grand scheme of what has happened over the last week, what has happened over the last month, it's an unbelievable amount of stories. Way more than I ever believed was happening back in 2015 whenever I first started to invest. I don't remember it being like this, but I also don't think I was following it as closely as I am now. So maybe it was, but yeah. Okay. Let's go on and listen really quickly. John Turnus is about to take over as CEO. We're going to have Farzad on here in the next 15 minutes or so. So I'm going to make sure that my water bottle's full. So give me a quick minute. I'm just going to play this 2-minute video and I'll be right back.
Name John Turnus, because on Tuesday, the little-known Apple executive takes over as CEO of the company. And in his final days at the top, Tim Cook appears to be clearing the deck for his successor. Mackenzie Sagalos with more on that in today's Tech Check.
And Brian, what Tim Cook seems to be doing in his final days in the C-suite is taking care of some of the tougher business and policy decisions now so that incoming CEO John Turnus can start with fewer distractions and become the face of what could be Apple's biggest product cycle in over a decade. Now, one place you can see that is services, arguably the business that Cook is proudest of building beyond the iPhone. Just this morning, the company again raising the price of its Apple TV streaming service, the latest in a string of unpopular moves that Cook has been willing to own before he leaves the CEO job. He's also been doing the same on the product and personnel side. In the last week, Apple's cut AI and software engineering jobs here in Silicon Valley while pushing out more incremental hardware updates and the latest generation of its Mac chip, the M series. All useful things to have, but not exactly the kind of things that a new CEO wants to find in his first few weeks on the job. Now, that leaves John Ternus to own the bigger product story at Apple's iPhone launch in less than 2 weeks from now, which, by the way, an accidental leak straight from Apple has already previewed what could be one of its biggest product swings in years. The centerpiece here, Apple's first foldable iPhone, potentially the biggest change to the product's design in nearly 2 decades, Brian.
All right, so we've talked a lot today about Kevin Warsh, like the newish Fed chair and how he's different than Jerome Powell. How do we think John Ternus is going to be as the new CEO of Apple? Who is he?
So he spent half his life and basically his entire professional career at Apple, 25 years. Right now, ahead of taking on the CEO job, he's in charge of the hardware division. So a lot of the devices that we're expecting to see, form factor changes that haven't happened in over 10 years at this company, John Ternus has been working on in the background. And what's so important about this upcoming event on September 9th is the fact that he's introducing himself. John Ternus is introducing himself both to Wall Street and to the consumer. He gets to be the face of form factor changes that could be revolutionary to the brand. We got a little preview of what he's like. He did this GMA spot around the MacBook Neo, a very popular device, this lower cost MacBook that has been a huge seller for them and really breathed new life into that Mac segment for them. So that's who he is, but there's a standing question of how he delivers the message in less than 2 weeks from now. I'll be down in Cupertino to see it.
Okay. The MacBook Neo is fire. I mean, the fact that they've been able to make a real laptop, like especially for like students, that cheap, even after a lot of the memory price increases, it still is wild that is, I do think it's one of the better products that I've ever seen from Apple. In terms of the performance, you're getting the Apple ecosystem, extremely cheap price. What do you expect from Micron earnings? Well, I mean, we're over a month away. But yeah, I believe it's going to be quite good. Honestly, I sometimes tone down how bullish I am on the AI trade because I don't think many people do share my beliefs. I think it's going to last a very long time. I think Elon sometimes gets his timelines wrong, but I think directionally speaking, where he believes the future is going to go has definitely been where we end up going. Maybe not on the same timeline, but he does really talk about how, just fundamentally speaking, artificial intelligence is going to change everything, and he's betting his entire future on that. I mean, talk about someone who has never tried to secure his retirement. Even at $1 trillion net worth, he's still betting those companies entirely on the future of robotics, on the future of transportation, on artificial intelligence, on agents. And going all the way to the point where he's saying, the need for chips, the need for memory, is going to be so much in the future that we have to build our own fabrications, and not just one, or not just like a regular size fabrication. We're talking about like one that would be able to produce 1,000x what the next largest, current chip designers are currently making. And I think like just that size and scope, even if it's off by 50x, is still a wild future to where, even if it comes in at 2% of what he's saying, is a wild future to what we would potentially be investing toward. So I remain extremely bullish, and there's no AI future, I don't believe, without memory. So I think that Micron is going to do well, but yeah. You should go back and research the last 2 bubbles of 2000, 2008. And Lawrence, what am I looking for that you think that I'm missing? Is Tanner the most bullish and Chris the most bearish? I don't know if I'm the most bullish out of that group. I mean, I think I share a lot of the similar sentiments that Steve shares or that Amit shares. But yeah, I just think that I think Chris is very bullish as well. He just believes it's not going to come all at once. It, like other build outs, is going to be over a longer period of time. Yeah, some people would say Chris is the most realistic. But I think it's hard to look back in history and say, okay, well, when was the last time that we've had a piece of software that can think and act for itself be delivered in mass? Well, like, what happened last time? There was no last time. There was no thinking tool before. There was no one combined great use of human intelligence. So, yeah, I think it's hard to put the moves of the past on this type of build out. We've never seen anything like it. I mean, every record in terms of overall spend, the valuations are quite low. Like, it doesn't really look, there's not a lot of overlap between the 2000 era bubble. The 2000 era bubble was focused on things like clicks, eyeballs, impressions. This time, that would be like focusing on artificial intelligence based on token use. But we're not doing that. We're not focused on token use. We're focused on revenue leading down into operating profit. And then which are the companies that can continue to remain free cash flow positive? That's why Microsoft is getting a bid. So if you're focused on the fundamentals and those still look good, I have a hard time seeing the overlap to the 2000 era crisis. And people can talk about the cables that were laid and the underutilization that eventually got acquired for pennies on the dollar. It's like, where are we seeing the data centers that have been underutilized? We didn't see that. We were laying fiber way out into the future that was expected to be used in the future. The data centers that are set up today, the second the data center is online, it's fully booked out. It's booked out years in advance. So yeah, it's just hard for me to see some of those overlaps. Okay. Will Tom Lee step down from BMNR when when he cashes in big at the 5% of ETH holdings? I honestly don't know. I could see it happening both ways. I think that he's caught a lot of crap for being a part of BMNR. And he does have like a big 9-figure payout whenever that happens. But would he end up leaving before the next run? I don't know. Okay. Let's continue on here. Sentinel-1 was also on CNBC. Let's check the markets. Where is Sentinel-1? Sentinel-1 down 7.3%. Pretty wild. The names that are working, DraftKings ended up seeing a large boost. What was this about? Let me try to find this. That was just midday. Kalshi just took a major legal hit. Sports predictions look a lot like sports bets that federally protect financial swaps. Ninth Circuit Court said that sports bets aren't swaps under federal law. It's a blow to prediction markets and a win for DraftKings. And where's Hood on that news? Also down. Okay, Workday up 5.5%. ServiceNow up 4.3%. Affirm up 3.88%. There was a major earnings beat. And you can see that as we zoom back, how much the markets have appreciated from yesterday. And then obviously we saw some of the more hawkish commentary, which is bringing down Affirm now. Still up 4%, however. So good earnings day, but potentially souring macro gets you, that mix brings you up only 4% rather than up, 11 or 14% or whatever it was earlier. NVIDIA under 217. Wow, guys. Down almost 5% on the day. This is single-handedly, even though it's not the only company that's down, but this is bringing down the NASDAQ. This is bringing down the S&P 500. That is crazy. Feels fake. Maybe. I mean, maybe this is the market correcting it because, it's Friday. Covered calls are closing. Make sure that the options have the right pricing. I mean, who knows how they're hedging this position right now. But that would have to be, I don't know how that works in terms of the ability to control a company at this size. You would need a lot of traders acting at the same time in order to bid this company down 5% while new buyers are potentially looking to take advantage of this sold off price. So will it end up being up on Monday? I mean, I could definitely see that. I blame options, but this is stupid. I agree with you. Can you imagine if NVIDIA closes down 5% after the revisions that we've ended up seeing? Just as a reminder, what those revisions look like. We were looking at this before Matt Money ended up jumping on. But this is crazy, guys. We can even go to this on a quarterly basis. Expectations, day after day, we jumped up from expecting next quarter to be 235 on EPS to 247. The other quarter, 266 to now 275. Every single one. We've never seen a revision this high. This was one of the greatest revisions from NVIDIA in terms of its overall expected EPS. And then even on revenue, you go as far out as Q4 of 2028. Wall Street's now expecting over $200 billion, which I also said during the earnings call. I do believe that's going to happen. We're going to see over $200 billion. It's more than 100% of what we saw this quarter in terms of growth between Q2 of 2027, which is what we just saw, and Q4 of 2028. Wild. So this is the part of the trade that I'm extremely focused on. As Kelly says, it's really easy to buy here. I can't buy another share of NVIDIA. I mean, I'm just too full. I've just had too much to eat. It's over 50% of my entire portfolio. So, and I've kind of adjusted that. I think I'm going to continue to hold it out. If, the rest of my portfolio ends up running and I see growth in other names like Shopify and Nubank and SoFi and, Robinhood and Microsoft and all those names, well, then that's going to lower that 50% holding for me on NVIDIA. If NVIDIA ends up exploding even higher and leaves behind the rest of the market, I will have to start to trim. I can't let it get to, 70% of my entire portfolio. I can't do it. So, yeah. What price would I buy? I can't. I mean, if it got really low, yeah, I could buy at 150, but or 140, but I'm not doing that. That would be a short-term hold. But ladies and gentlemen, it's about that time. I'd like to welcome the next guest on the channel. the great and powerful. How you doing, brother?
Good, man. How you doing? Oh, we're both wearing glasses. Heck yeah.
Yeah,
Let's go.
Where's
the
doing
wig?
it all my life these days.
Where's the wig, bro? Where'd the wig go?
It's right here.
There it is. I love it.
But
Dude, that was such a
during
fun stream.
NVIDIA earnings, I thought I'd try to dress up like Jensen, but it just came off as some sort of weird grandmother or something. I don't know. It didn't look like Jensen at all.
Oh man, I thought it was brilliant. It looked very good on you, and I encourage you to wear it all the time.
Yeah, there you go.
Yeah, thanks for having me, man.
We were just talking about NVIDIA. I'm curious some of your thoughts. Obviously, you know, Elon Musk just in the recent SpaceX earnings call just announced that NVIDIA may be an exclusive provider of GPUs and CPUs for SpaceX, potentially one of their next largest growing customers. And yet they blew out earnings and the stock is down 5%.
Yeah.
How do you look at the stock in general?
I don't. Yeah, I don't. I'm much more focused on the technology, to be honest. Like from my standpoint, you know, everything that I've always done with these companies is understanding the technology that they're trying to innovate on and investing based on that. So that's how I started in the stock market from the very beginning. So I've been a retail investor since 2012, and the reason why I invested in Tesla from that point was because it became obvious to me that electric vehicles will be the future of transportation. And I think if you fast forward to today, it's become very, very obvious that that's the case. Extremely obvious, right? And so, and the layer on top of that they built was the self-driving tech stack on top of that. And when you combine manufacturing prowess with physical AI that can drive the cars, you get this tremendous moat that will develop over time, which has come slower than all of us hoped. But the moat remains because you're pairing a gigantic manufacturing process that's underpinned by game-changing technology with an entire stack that they've built from the ground up that teaches the cars how to drive using neural networks, photons in, actions out. They fully integrate the chip, they fully integrate the data flywheel, they fully integrate the manufacturing process. So what does that mean? You can marry everything together, and then you also have the lowest cost versus the competitors, and you have the biggest scale versus everybody else. So that's the Tesla story. SpaceX is doing the same exact thing with rocketry. They're building their own data centers for their Grok models. They're going to space to harness energy. And NVIDIA does something very similar too, right? So like they co-design everything. They're trying to do everything like the very Rubin system. The more I learn about it, like it's such an interesting thing to learn about because it's literally the entire system that would generate a token. They are essentially building in-house, and they're packaging it so that when a customer uses it, it gives them the highest level of intelligence for the lowest amount of cost. And as we transition into the future of artificial intelligence, people are going to worry a lot more about speed and cost as a certain threshold is hit around intelligence, right? So like the analogy I like to use is like, okay, let's say Fable 7 can cure cancer, which I hope it does. Okay,
sure.
Fable 7 cures cancer, but then you have, I don't know, whatever, pick a model, DeepSeek v4.9 or 5.2. And DeepSeek version 5.2 or whatever is very good at doing taxes. Fable 7 cures cancer, but it's $1,000 per million tokens. DeepSeek 5.2 is the best tax processor of all time, and it's $1 per million tokens. Which one are you going to use do your taxes? You're not going to use Fable, right? You're going to use the other one. So as these things happen, as these models proliferate and they become a lot cheaper and a lot more capable and they reach a threshold, the ability to serve these models at the cheapest cost possible, at the fastest speed possible, becomes the moat. And so the hardware systems that can do that are the ones that are going to win long term. And if that's NVIDIA's focus, then they're going to be a giant winner. And that's obviously what they're doing by bringing everything together, right? And the demand for AI is going to be so gigantic that you're going to have room for multiple players. You're going to have room for NVIDIA. You're going to have room for AMD. You're going to have room for Tesla to vertically integrate. You're going to have room for OpenAI to vertically integrate because there's going to be so much unbelievable demand. It's like we're going from a world without electricity to a world with. You don't have one electricity provider in the world. We have multiple. And even in the United States, we have we have multiple grid providers in the Texas, and then the federal one is all jacked up, which I think will change, by the way. So that's that's my rant for the last, I don't even know how long I've gone for, 5 minutes. Sorry, Tanner. Hi, how you doing?
I'm doing great, man. I wanted to touch on some of the things that you just said. So I completely agree with you, by the way. I think both open source and some of the smaller end models are going to do well, but so is Frontier. The way that I sort of thought about it is like, imagine the, smaller end models have 120, 130 IQ or something like this. The large Frontier models that would essentially be orchestrating the lower models might have 160, 170 IQ, but that actually makes them better because you want those models telling the other models which direction that they should be essentially going. So I'm a big believer that every single person and business is going to be orchestrating a team of agents underneath them. So by the way, let's talk on Tesla.
Can I actually jump on that real quick, Tanner? Like even on that, like even if that doesn't materialize, like let's say even if the Frontier models get to a point where, let's say like the smaller models have the IQ of 170 and the Frontier is at 390. So it's like my one thesis is that actually there is a certain threshold to AI that once you reach it, people are not going to appreciate it. Like people are just not going to appreciate it. So for example, like this is a stupid analogy, but this is like how I view the lens that I view it through. How many people appreciate the genius of a 210 IQ person or a 170 IQ person? It's very few people. Yeah, very few people, right? And I think AI is going to be the same thing. Like once you reach a certain level of IQ, it's going to be like, okay, like what am I even looking at anymore? So like even if the models are all good enough and they all hit a threshold, even then you still need to generate tokens. And so the companies that are best at generating tokens are going to be the winners. So it doesn't even matter what happens on the Frontier landscape or in the open source landscape. You still need to generate the tokens. And the cheaper it is and the more accessible it is to people, you're going to have Jevons paradox kick in, which means that you're going to have this effect where as it gets cheaper, there's going to be more demand, which is going to generate far more revenue on that lower cost than you would otherwise. So I just want to make that point too, because it's like, if you're very good at making the tokens, you're going to win it anyway. It doesn't matter. Yeah. At some point, you kind of reach a threshold of managing your email workflow that like the smarter and smarter models, they're not going to make any difference. I get that. But speaking on Tesla, because obviously you cover these companies quite closely. I mean, that's obvious. Too closely.
The first time I ever invested in Tesla was the first company I've ever purchased was in 2015. Held it for an extremely small amount of time, probably made like $40, and then rebought in at 2018, and then held that till 2025, and then now I'm no longer a shareholder. But I definitely still want to be a part of the Elon sphere. I don't hold any SpaceX. I don't hold any Tesla. That's just purely based on valuation. But I definitely believe in the vision. My concern, and I want to sort of point this to you, is how do you feel about some of the timelines and when we're actually going to see some of the aspirations of Elon end up materializing?
That's the big struggle with holding Tesla and SpaceX. It's always a waiting game, right? I think ultimately, like what it comes down to holding a Tesla or SpaceX is the belief that Elon will outperform in the long term. It's the belief that he's going to be able to deliver sort of like the bot and the self-driving car and the reusable rocket. It's executing on very hard technology.
Right.
And like that's why these companies get the premium, because that's ultimately what people are going after.
And he's like delivered the impossible before.
Exactly. But it's if you're trying to time it, it's the worst. It sucks. It sucks. It really does suck. Like, I'm not going to sit here and be like, hey, I'm a Tesla investor. And I'm glad Robotaxi is delayed. And I'm glad that it's taken longer than we would have wished for bot to come. Like this is true. But the thing is, like, the reason why these companies trade at such high valuations is because he has done it in the past multiple times. That's why Tesla trades at whatever. I don't even know what the P is anymore. Like 110. I don't even know what the P is anymore. It's a big number, but that's because Elon carries a premium. So if you look at the past performance of the company, you look at, okay, what happened between, say, 2012 and 2018? Like when it had its first run up and then it had its next run up after COVID, was that the company was able to lay a foundation to build an EV profitably. And that took a lot of time. Now, the next leg is I'm going to build a foundation to deliver on a fleet of cars that are going to be able to drive themselves everywhere using neural nets end to end. That's also very hard. And you also have the regulatory aspect that you have to climb through. And so now, like, the big debate is like, okay, well, Elon is intentionally misleading investors because he keeps shooting for these like crazy goals that don't materialize, versus maybe he's just too optimistic and this is a lot harder than all of us thought and it just sucks. Like that's where my standing is at, is like, it just sucks, right? But if you just view like the track record of the companies and the track record of the leader, and you think about all the things that they've delivered in the past, it will materialize in the future. And so if you're confident that it's going to materialize in the future, then the question becomes, okay, like from a risk-adjusted basis, what's the likelihood that Tesla is going to deliver Robotaxi and bot by 2035 versus me trying to find a better return on my investment by then if I think that bot's going to sell millions of units per year and Tesla's going to be the only at-scale manufacturer of self-driving cars. And then from my standpoint, for somebody who has the patience, you know, like let's say like yourself, Tanner, you're in the market 24/7, literally, like you live and breathe this stuff, right? It's much easier for people like you and others to find better opportunities in the next, let's say, even 1 to 3 years, right? But for me, it's like I have the luxury, thank God, that I can wait 10, 20 plus years. Yeah. So for me, I can tolerate the missed deadlines, and I can tolerate the hyper optimism, and I can tolerate the, you know, like the drama between Tesla and SpaceX merging. I can tolerate all those things. But I fully understand why that's hard for a lot of people, because the truth be told, if you look at the last 5 years' performance for Tesla and you compare it to literally any other company, basically, you're going to be like, okay, I should have been in something else, right? Totally get it. But obviously hindsight is 2020. But I'm not going to sit here and like dismiss that frustration. It's 100% valid. So now the question becomes, what's the likelihood that Robotaxi and bot, if they materialize in the next 5 to 10 years, what does that do to valuation? And that's where it's like, it's very easy for me to sit down and be like, yeah, if, you know, in my opinion, when they solve self-driving fully at scale, because I already don't drive my car in my driveway, so I already experienced this technology on a daily basis, so I know they've done it. It's just a matter of just getting it out there and fixing the sort of the very few edges and getting regulations to buy in, and then transplanting that technology to the bot. Once that gets there, what does the market value that company at? And from where I sit, it's at least a 10x. Not financial or investment advice, it's at least a 10x. So then the question becomes, what is a more obvious 10x for the next 10 years? And so from my standpoint, like SpaceX maybe.
So I want to talk on that really quick, because help me understand. Right now, I'm not questioning at all. Tesla, full self-driving, no one comes close. Okay? Yeah. Waymo has a really good option, but it's impossible for them to get cars on the road at scale the way that Tesla does. Yeah. Is there a future where a company, let's say NVIDIA with Alpamayo 2 and whatever they're creating, has a out-of-the-box opportunity to offer to Toyota and Honda and put cars on the road, not based on real miles driven, but on simulated miles that Waymo and AV Ride and all of those companies have demonstrated that they can do self-driving as well. Although it's not at the quality that Tesla's at. What is the pricing premium that Tesla can offer if other companies potentially are following behind?
Well, is that the pricing premium? Is that because you're vertically integrated, your cost per mile is going to be lower versus the other solution? Because if you're a third-party company that has to integrate a third-party solution, then by theory, your cost structure is going to be higher than the company that's fully vertically integrated. So the way I think about this is Tesla over the long term, with its scale, with its proven scale of a brand new technology for transportation with these electric vehicles, which every single legacy automaker has failed at. Let's separate China. China is phenomenal. China is something else. But take every other legacy automaker. Have any of them done an EV at scale that has been successful and profitable? No. They haven't. So the scale doesn't exist to actually deliver on this technology. So NVIDIA can be blue in the face in trying to develop this technology and make it happen, which they will. The question becomes, which company will be able to do it at scale and be competitive from a cost per mile perspective versus a fully integrated end-to-end, vertically integrated company in Tesla that is psychotic about cutting the cost per unit and the cost per mile. That's the lens I view it through. And so like, and then ultimately
does it need to be an electric car in order for it to be fully self-driving?
For sure. It makes it a lot easier. right?
Okay.
Because you don't have to deal with gas stations. You don't have to deal with you lose the flexibility of like being able to be in somebody's garage, being able to go into a building, right? The fumes and stuff. Also with a gas car, the response is a lot slower because when you press the accelerator, you have to wait for the cylinders to spool up. So from a safety perspective, gas cars are far less safe. Like when you're thinking about like 200 milliseconds response time, an electric vehicle is going to be a far safer alternative than a gas car. And so if your competitor says we've been able to avoid 10 times more accidents because we're electric, people are not going to write the less safe one by default, right? Yeah. So the electric vehicle becomes a huge selling point in this, right? And then the other thing I would posit too is like since Tesla controls the entire supply chain for the chips as well, they can custom build all their chips for the vehicle dynamics. I mean, not the chip level, but the model level. But then that model sits on a chip that's fully vertically integrated. That's extremely good at running that model. In theory, NVIDIA will do the same exact thing with their chip. But the thing that they will be missing is marrying the vehicle platform to that thing. And my assumption is there's going to be something there, even if it's like small. There's going to be something there that's going to differentiate the experience. From it's faster response time. It's a little bit more smooth around the corners. The bigger vehicles are easier to train on the Tesla on the Tesla one because they have all the data from the smaller cars. Whereas with the NVIDIA one, they don't have as many miles to train on the bigger cars. So maybe when you make the right turn with the bigger cars from Tesla, you don't curb yourself versus where the other companies that like all these minutia start to show up, right?
Yeah.
So it's NVIDIA is dependent on a legacy automaker system to get their shit together, and the legacy automaker system hasn't and won't because it's unprofitable for them to make electric vehicles, and they have a culture problem. That would be my argument.
I've sort of thought about Tesla versus literally every other name as being similar to the fight between Android and Apple. That Tesla is similar to Apple as a fully integrated end-to-end system. But then there's going to be 100 or 1,000 other companies that work together to create an opportunity or a solution to self-driving and Robotaxi on the other end. Is that a fair way to look at it?
100%. I view it the same exact way.
As a part of expanding that ecosystem, obviously, Tesla's not the only thing that Elon is doing. We also have SpaceX, and there's some conversation about potentially integrating these two businesses. Where do you stand on that integration, and how should investors play that into, investing in SpaceX versus Tesla?
That's the big drama of today now in Tesla land and SpaceX land, because Tesla land people feel like they're going to get jacked over because let's say SpaceX proposes, let's say they proposed $400 a share under all-time highs as the premium. Tesla investors are going to be pissed. Because they're going to say, number one, you're offering me under, I'm just hypothetical. I'm not saying this is going to happen, but hypothetical, like the narration is going to be, okay, so not only are you offering me under all-time high prices, you're giving me a discount on Robotaxi and bot. So like, why should I take that deal when you're telling me bot's about to take off, you're ramping up cyber cab, right? FSD is starting to sell cars very clearly. Like you have all these things starting to, and it's like, oh, by the way, I'm going to actually buy you at a discount. Tesla investors are not going to like that. They don't like that. And that's a lot of the drama that's happening in this case. Now, in my opinion, if SpaceX comes, and I'm just describing investor sentiment right now. I don't know what's going to happen, but this is how investor sentiment is going to play out. If SpaceX says, you know what, $650 a share, then people are going to be like, oh, okay, I can go with that. Or even $700 a share. Oh yeah, then I'll really go with that, right? Or whatever. There's a number there. Everybody has a number.
But what does SpaceX investors then say if you're willing to pay $650, $700? Is that
exactly? There you go. Now, that's Elon's in an impossible. Someone's gonna be pissed. So the question is, are the Tesla investors going to be pissed? Or the SpaceX investors are going to be pissed? Now, this is a short-term discussion. This is a 1 to 3 year, 5 year discussion. Over a long enough time horizon, if you believe the AI boom and you believe that this is a next industrial revolution, where in the next 20 years, GDP might double, triple, or double again. On top of that, where we have this amazing, Elon calls it amazing abundance. If we have this like transformation of society, then it's like, okay, well, as a Tesla investor, you're like, you know what? I'm kind of happy getting a piece of SpaceX because SpaceX is going to send data centers to the freaking, like in space, and they're going to have by far the largest amount of tokens that are going to be generated. They're going to have this entire satellite network that's going to deliver data connectivity to everybody. And you have this reusable rocket in Starship that's going to transform point-to-point transportation on Earth, and it's going to allow us to harvest the moon and harvest asteroids, et cetera, et cetera. So in like 20 years' time, why shouldn't these companies combined be $100 trillion? And at that point, it's like, who cares if I get acquired at 1.3 or 1.7? Yeah. It doesn't matter. So it's like, this is where the Elon factor comes in, where Elon sets this grand vision, and then people are like, you know what, you're doing crazy shit. I think you're going to, excuse my French, I don't know if I can curse. Sorry, Tanner.
You do have a
sorry, I won't do it
button,
again. I won't do it again. You'll have investors that, I lost my train of thought. What was I saying just now?
Just in terms of if the company goes to $100 trillion, the Tesla investors are not going to care what the valuation is.
Or the SpaceX ones, right? And this is where Elon's going to be able to get away with it, quote unquote. People are still going to be pissed, is because his investor base believes in his vision. The investor base believes in his vision. And so the question becomes, at what price? You know, Tesla investors are going to very much believe in his vision when it's at 650, and SpaceX is going to believe it when it's at 500. I don't know, pick a number, right? But once he navigates that minefield, I think we'll get on the other side of this. And I think on the other side of it, you have this sort of very fascinating story that you have a vertically integrated stack of a company that's basically trying to build the next generation of like the foundation of civilization. You'll have transportation systems and autonomous cars. You'll have physical labor and the bots. You'll have digital labor and Grok. You'll have point-to-point transport through space in Starship. You'll have a communications network in Starlink. You'll have data centers that power the whole system. You'll have vertically integrated chips with TerraFab. It goes on, and it's like, okay, why wouldn't you want that company?
Yeah, honestly, this is why I want to be back involved in Elon's vision, because I do believe in a lot what he says. The only thing that gets me caught up, and this is from an investor standpoint, I know you're very focused on the technology and happy to just make that long-term bet, but if that vision does play out, there are companies that I believe, like NVIDIA, that are going to be a part of that build out that
100%
look much cheaper on the valuation today, you know, but still benefit as a proxy. That's one of the things as well. Elon's vision, and this has always been what he's been good at, but he's good at build outs, hardware, obviously building Colossus 1. I think it was something like 89 days. Colossus 2 was not too much longer than that. And this is gigawatt scale, first in America. Unbelievable. Just as a neo cloud, that is a big differentiator.
Sure.
But every single one of these products or projects are tens of billions of dollars.
Yep.
Where does he even get the capital? SpaceX is not cash flow generative. As of last quarter, Tesla fell below being a cash flow generative business.
Yeah.
Combining these two businesses is, where do you get the money?
You know what? That's an amazing question to ask for almost every other CEO, but Elon is the greatest capital raiser of all time.
Yeah.
So it's like, to me, he'll find the money. I mean, like I think it's one of those things where like he has, and I know this sounds like sort of hand wavy, like, okay, like you're sort of trivializing something. I'm like, I'm not. It's going to be a big deal. It's going to be unbelievably expensive. The combined entity is probably going to be cash flow negative for years as he's building out this entire system. But it's also true that objectively he is one of, if not the greatest industrialist alive today, up there with Jensen, up there with talents like your Alex Karps. I would put Palmer Luckey in there. You have these like monsters of industry that people believe in because they not only believe in their own, the thing that they're selling, they're actively executing against it. And when you do that, you're kind of a magician because you can just raise money.
Yeah.
People will just give you the money, right? And I think that's what's going to happen. It's whatever capital he needs, he'll get. What's going to happen is the valuation will suffer. Like, if I don't know if he'll do it through like if he'll do like a raise on the stock market, if he'll do it through the NVIDIA. I know NVIDIA is doing that partnership with those 6 banks or whatever for $500 billion. My guess is SpaceX is probably a big player in that. They'll probably get a significant percentage of that. That's going to be extremely helpful for them to sort of build out on the chip side. But I think SpaceX has like almost 100 billion in the bank. Tesla has like 40, if I remember correctly, something like that. So 140 billion between the two of them. It's not nothing. Right? They have
no, definitely not.
They have a growing business. They have growing businesses. Like Tesla is still back almost to all-time high sales. I think last quarter was 480,000 delivered. That was their second or third best quarter ever. There's clearly increased demand now because people are buying the cars because of FSD. On the SpaceX side, you have Starlink growing like crazy. You have their data center business is about to 5x year over year, well 3 to 5x call it. That might put the company closer to cash flow. Even by say 2028, 2029 potentially. Who knows? Like when these numbers come. But I think the end result here is that there is a pathway for Elon to have an underlying business model that's going to allow him to raise whatever money he needs, just like Jensen would, just like Alex Karp would if we needed to. But he's been clear of that boat for God knows how long. There's just certain people that know how to raise capital and they have the businesses to do it. So I don't think it's going to be a problem.
And I think to add to your point, I read somewhere that everything from Starlink to Dragon and Starship and all of these different programs that they have done was in total something like $30 billion to essentially make everything that is SpaceX. So adding an additional $90 billion of capital on top of that, it's like, what?
Who cares?
Yeah, I know. 4xing the amount of new projects that you're potentially making.
Yeah.
Now, one of them that gets me going, I really need your help here because I'm not even fully sure I know what this is. And you've been making a ton of videos and everyone should go and watch them, by the way, but help us understand what is TerraFab.
I still don't know. It's still kind of like this black box. So the understanding from how the company has framed it is that they are building basically their own chip. I don't even want to call it a manufacturing facility, but it's the way it's being sold right now is as a packaging facility, where they're basically trying to bring in all the different pieces that go into chip making, which is, as you and your audience is super aware, is one of the most insane batshit, one of the craziest things in the world to manufacture. Just lithography on its own is truly the most mind-blowing technology I've ever learned about is lithography.
Yeah.
You're exploding tin droplets 50,000 times a second to etch ultraviolet light into a freaking silicon wafer, and then that whole thing powers our entire civilization. It's like, what? Like, we live in a simulation, very obviously. How's this even real, right? But the thing is, there's a long lead time to get there. There's a long lead time because you have to have, you have to do your variations on what the mask is going to look like. You have to make sure that it actually aligns with how you're trying to execute on the model. You have to make sure it's not wasting more power than you thought it's going to waste. You have to think about the design of how, where you're going to put your memory chips in relation, blah, blah, blah. Like, you just go down the list of crazy stuff you have to do. The thought process is with TerraFab, you bring everything in-house. So instead of having, say, a 6 to 9 month lead time, on landing on the chip you want to use, you have a 4-week lead time. You have a 2-week lead time. And that helps you move a lot faster in a world where speed and cost become unbelievably important. Okay? Yeah. And then over time, the thought process is my guess, again, this I'm talking about like how Elon usually executes, is he'll find the biggest bottleneck in a process and then he'll bring it in-house. So my guess is at some point he will probably make his own lithography machines 5-10 years into the future, maybe. He talked about having a free electron laser underneath the TerraFab, which is a new light source that will be used. So instead of using tin droplets to make the EUV, the light itself, he would use basically like, if you guys are not familiar with this is a technology that's been around for a while, but it's just starting to be commercialized. You basically shoot an electron and you sort of like use magnets to undulate the electron, which generates lasers, and then you use those lasers to print on the thing. And so what that allows you to do is it's a lot cleaner. So you don't have to constantly clean the machines from those tin droplets, but you can also it's kind of like a utility. So you basically have like, how you have your electricity at your house or your water line, for example, you just have your EUV light coming into the building, and then you shoot the EUV light other places, right? So when you have your own facility, you can do that. So it just enables the company to have that variability. I think ultimately what TerraFab is long term, I think is just ensuring that the United States as a whole, but especially Elon's companies, have a way to get chips long term if something were to go down in Taiwan, or if something like it's more of a national security, more like we need to ensure that we have access to the chip, actual manufacturing of the chips, so like TSMC in this case. So because it's going to be unbelievably important, because if, so let's say something, God forbid, something happens in Taiwan, an earthquake, or let's say, China, either through peaceful or otherwise means, decides to reroute that supply to itself, it's like, okay, what happens then? The US is kind of screwed, right? And so I think it's that kind of play. It's like technologically super ambitious, but then ultimately at its core, it's ensuring that a bottleneck is addressed in case the worst were to happen. Because if the worst were to happen, your entire business crumbles. A lot of businesses will crumble, right? NVIDIA would suffer tremendously if something were to happen.
100%, 100%. So I was looking into this. Do you have any metrics in terms of just the sheer scale of this? Or even, I've heard some projections on how much this might cost to build. I've heard as high as $1 trillion. What is...
Who knows? Who knows?
How do you even benchmark what TerraFab is going to be, or what the output of that is into the future? And what's the timeline?
Yeah. Well, the goal, so the thought process here is, if you get, the way Elon does his sort of long-term thinking is like, okay, he's going to come from the angle of assume that you can do a terawatt of compute per year with Starship. That's where he'll start. It's like, now that I've solved Starship reusability, assume that we're going to get to 10,000 to 100,000 launches a year. And those Starships are not going to go empty. They're going to have AI satellites in them. And so if I want to fill up every single one of those satellites or rockets per year, per launch, how many chips do I need? And then he'll work his way backwards from that goal. So I think the goal, they have been unclear about it. I mean, they did throw out like a terawatt per year of compute, but that sounds absolutely batshit crazy. The way I would think about it is, back in 2015, when Tesla started the Gigafactory project in Nevada for the batteries, right? The goal at the time was to make as many lithium batteries from one facility as the rest of the world combined. And at that point, people were like, that's crazy. And then in 5 years' time, they did it. So that's how I would think about TerraFab, is I think probably not 5 years, but let's say in 8 to 10 years, their goal is to match global supply of chips. Yeah. That's how I would think about it.
Single-handedly.
Single-handedly. But that's what's going to have to be required, because if we really need to match the demand of what we all think AI is going to be, then without chips, you don't get there. It's literally impossible. So at least we have these guys trying to make it happen, but then you also have NVIDIA trying to massively scale up their business with TSMC. They're doing everything they can to go as fast as humanly possible, right? So I would view this as a confirmation that the biggest players in the game are putting the money where their mouth is, which is ensuring that the underlying supply chain is there for a revolution in how AI is going to change our lives. That's the way I view this ultimately.
Now, is that purely a SpaceX project? Because I thought I saw something around it also. Combined. Tesla also has a part of that as well.
Yeah, and that's like the biggest clue for people that follow this stuff closely. Is like, okay, this is almost like the feeler to put it out there. Is like, hey, just imagine Tesla and SpaceX work together. We're doing this together. But it makes sense because, the cars need chips, the bots need chips, the satellites need chips, the AI data centers in space need chips. The terrestrial data centers need chips, so it's like okay, like it's a shared project because we all need the chips, right? So, but I do think I
like how you say it's a feeler. It's the biggest human project like development ever of all time.
Welcome to the most crazy person on the planet right now. Yeah, that's how he operates. It's just so fascinating, and I do love a lot of people are like people that follow this story are like kind of crazy. It's like yeah we are kind of crazy because it's one of those things, like it's one thing to believe it, it's another thing to like actually study the technology and getting familiar with the product and being like, holy crap, like this is kind of actually happening. It's kind of like when you watch Starship come back, you can't help but feel like this is the most incredible thing that I've ever seen. That's my personal opinion, right? So it's kind of like, okay, like there's some pretty special stuff happening here with these companies. But what's even more beautiful, I would say, is like if you look at the surrounding landscape around like what's happening right now, you have your Jensens in NVIDIA, you have your Alex Karps with Palantir, you have all these like incredible entrepreneurs that are starting to come up, they're starting to do crazy things again, and they're starting to do hard things again, and they're bringing America to the forefront of industrialism and building hardware. I think that's the lens I view this entire thing in, is that the West, specifically America, is going back to building stuff. We are finally building stuff again. And for the long term, this is an unbelievable premise, because building stuff is not only great for the economy, but it also generates the most secure jobs.
Sure.
Because it's in hardware, and it's some of the most durable moats, because hardware is infinitely harder than software. Building a rocket is a lot harder than building a piece of software. And yeah, some pieces of software are a lot harder than others, for sure. But like, what's harder? Lithography machines or an ontology? I'm going to say lithography machines.
No,
okay? No disrespect to ontology.
100%. But even that being said, though, I think one of the potentially most exciting parts about SpaceX is Starlink. And due to some of the comments that Elon has said, 99% of this business of the future is going to be AI. I feel like people have already kind of brushed past a little bit about what's about to happen with Starlink. So can you speak to not only satellite V3 and what that unlocks for SpaceX, but also how that might be, one of the larger funding sources for SpaceX for the next little bit?
Yeah, so Starlink is fascinating, because I agree with you, because the way Elon thinks about the long term of the company, like Starlink is an afterthought for him, right? Because it's like, we're gonna put stuff on the moon, we're gonna have a mass driver on the moon, and then people are like, so what's Starlink? Like, what are you? What's going on with Starlink there?
Crazy.
It's crazy. Like, what's fascinating about Starlink is it's already massively cash flow positive as a business, right? And it's like, I think 60% margins or something. And so for people that are not familiar, Starlink is basically the internet that you get from space, but it's very fast latency. It's on a lot of planes now. You can get it with it. You just go to Home Depot, buy the satellite, you connect to it. It basically works like your internet at the home, but you can basically have it anywhere on the planet. Basically, that's the selling point.
And any cottage that I've gone to recently, it's been powered by Starlink. So the internet.
And it's fast, right? It's like you wouldn't even tell the difference if it's like cable or internet, unless you're like doing something like uploading 100 gigabytes worth of data or something. It's not going to be much slower there, obviously. But what V3 unlocks, what the next generation of the satellite unlocks, is that it allows the company to have a lot more bandwidth per satellite. So the new satellites, I don't remember the exact number, but it's somewhere between 6 to 20 times more bandwidth per satellite, which means that you need fewer launches to cover the same amount of data throughput. And data throughput is directly correlated to the amount of money you charge, obviously, because you can have a lot more users, right? So that's one unlock. You can put a lot more units per satellite of bandwidth. Then the second unlock is Starship, which gives you two unlocks. Because Starship is a lot bigger, you can put a lot more of those satellites in there versus the Falcon 9.
Yeah.
So per launch, you can do, instead of, let's say, 20 V2 equivalents on Falcon 9, you can do 400 equivalents in Starship per launch. And then the other unlock is that Starship is rapidly reusable, which means that Starship can then, after it puts the Starlink up, it comes back, the whole rocket, not the first and second stages, the whole rocket, and then you can fill the rocket up again very quickly to a point where within hours or a day or two, you can go up again on the same rocket.
Right.
And so that massively reduces the cost of putting stuff in orbit. So what this has from an effect, like if you think about the total effective like impact to Starlink, is that the cost per unit of bandwidth in space plummets by like 90%. But you can charge the same, essentially, so, right?
Is it, whenever you talk about the throughput, is it more customers per satellite or also faster speeds per customer?
Both.
Okay.
Right, both, right. Because the bandwidth is going to be spread. So if you have like a set number of bits you can send, if you only have one person, then theoretically you're capped by that satellite or the receiver or the cap that the company is going to put on that user says you can't go past a terabyte, whatever that number is, or a gigabyte, whatever
Right.
the number is. But of course, if you have more people connected to it, then your total throughput goes down. So the beauty behind that is that they can select, like, it's okay, some customers will put extra ones and then we'll charge for massive premiums for, say, military use cases that need really fast bandwidth all the time, like uninterrupted, or boats or planes, et cetera, et cetera. So that, and then you have a lot more flexibility on the customers that you can service. And so that's going to allow the company to be even more cash flow positive on Starlink, to the point where, I don't know, they'll probably make close to $100 billion a year at like full scale, let's say, might be even bigger, that number. But then the funny thing is, if you compare that to like the AI side of the business, where you're generating tokens, that pales in comparison, because intelligence is far more valuable than bandwidth.
Sure.
Right.
Sure.
Unless you're limited in bandwidth for the amount of intelligence that you actually put out, which means that you need more bandwidth, so you might be choked out on the bandwidth side. But that becomes like an easily solvable problem because you just put more Starlinks up. You know.
Yeah, it's pretty incredible. It's just the valuation that I have to come to grips with, but all of the different opportunities are absolutely unbelievable. Not even to speak like you can get excited about the selling of electric vehicles, you know, best model ever sold, not just in the EV market, but just in general, the Model Y. On top of that, full self-driving, and then this weird long-term vision for Tesla of Optimus.
Yeah.
This seems to be continuously delayed. I think some investors got concerned about some of the commentary that Elon said. He said, you know, I kind of want to recalibrate everyone's
expectations,
timelines on Optimus. Where are we there? And then also, the question on top of my question, Elon said there's not even a second place whenever it comes to robots, essentially.
Yeah.
But we haven't seen a demonstration, or at least I haven't seen a demonstration of Optimus in a while. Seeing the whole Beijing Olympics thing, how do you feel about China's advancements in humanoids as well? Those are sort of my questions there.
Yeah, China's awesome when it comes to this stuff. Like that robotic Olympic thing was so brilliant for them to do. Like, talk about a content generation machine.
Crazy.
Just so smart. I was so pissed that we didn't do that as a country. Like, come on, like, you guys, what are we doing, right? It's so frustrating because these guys, like, China is so unbelievably good at harnessing people's like natural talents to build stuff and just letting them go build. Right? That's what it seems like to me.
Sure.
Now, the big missing piece that China doesn't have is the brain. So the brain is like, what? I have the body, kind of, but what do I do with the body? That's where the US has a huge advantage, right? Because not only do we have the chips to actually train the models and deliver the inference, we have the models as well. Like, even though open source is getting closer, and, you know, like, we're not even talking about like world models, like, for example, that FSD operates on, or like the physical AI models where they can interpret what the real world looks like and what actions I should take. The US is far more advanced. So the hope is, let's say the hope is from Tesla investors, which kind of was backed up by Jason Calacanis on a clip recently where he said he just saw Optimus very recently. He's like, it's going to easily be the best robot ever, but we can't say that because we haven't seen it, right? The hope is that Optimus will deliver on the promise of the marriage of a human or robot that has amazing hardware, that is extremely usable in almost all use cases, which requires a hand that can actually create actions, that's paired with a brain that knows how to execute those actions. That's the big deliverable on Optimus. Now, the struggle is that this was about a year or so ago. Tesla made the comment that they would stop doing live demos. I forget how long ago this was, but they're going to start doing live demos of Optimus because they were finding that competitors were copying their design. So they were able to go in there and kind of find the secret sauce and then develop sort of in parallel with them. So like their justification is we are going dark because we don't want people to copy us.
Okay.
The cynic viewpoint is you're not making as much progress as you hope you would make, right? So like those are the two things that are fighting each other right now. So, and from where I stand, it's like it's going to be impossible to tell until the product gets shown to the public. But the reason why I'm optimistic about their ability to do this is twofold. Number one, they are a manufacturing expert.
Yep.
They know how to build hardware. I would argue just as good as anybody else on the planet, and they've proven it because they have the best-selling car in the world, and the best-selling car in the world is electric, whereas a huge number of cars on the road are not electric, right? So you already took a quote-unquote hard-to-sell product relative to the rest of the fleet, and you have the best-selling car. And then if you compare that best-selling car to the rest of the competition, especially on a dollar per dollar basis, like at that price point, it blows everybody else out of the water, minus a handful of amazing Chinese competitors, right? So it's creme de la creme, number one, basically. My wife keeps sending me pictures of my son. It's funny. So that's one thing. And then the other thing is, sorry,
I just want to add in, if the whole brain body thing, we talked earlier about the models getting to a certain point of intelligence where you can't even appreciate the quality there. Is there a possibility that just Chinese distilled models off of American models would be good enough to make these robots indistinguishable between American robots?
Totally. 100%. Yeah, I think the complexity with that's a great question, right? The complexity with the physical world is that the physical world has a lot more degrees of freedom, right? So the amount of inference that's needed for that kind of process is like mind-boggling. And I'll use this example, right? So let's say an AI agent that we use is like, you have these parameters that drive the model, and the parameters are just on the human language, and it has to process all the information, blah blah blah. The very difficult thing with the physical models is that they require a ginormous amount of memory and a ginormous amount of throughput that has to be stored on the chip somewhere so that it knows what action to take. So the best way I would think about this is and when an LLM does a query for you, it's using text, and you can store, say, that file of text that you need, whatever that file is, to execute your query might be 10 kilobytes or whatever the number is. For a bot, it would have to essentially digest the equivalent of 1080p video from 8 cameras for multiple minutes to hours at a time, and that amount, it's like 10 million times more bits.
yeah
Right. And then you have to do computations on that. So you have two problems. You have it on the hardware side, where from the chip side you need enough memory primarily, and this is where people are like, Micron is like, guys, Micron's just getting started, okay? The amount of memory we need is the physical world is going to, if you thought chips were short now, just wait until the physical stuff kicks off. That's what I would like to say.
Yeah.
It's going to be nuts. So it requires a lot more memory, and then the models are completely different. You have to basically reinvent the models. You have to retrain them completely differently. So it's a whole new ball game. Now, where China might benefit tremendously is that they are good at the hardware. They are good at building hardware. So if they figure out the brain, in theory, they can have a lot more units out, right, than, say, Tesla, in sort of in that arena. Now, Tesla's still going to be one of the top players, obviously, because they already sell a bunch of Teslas in China, and China has a ton of EVs. They're already outperforming in a market that is, let's say, hostile against their international players, right? The Chinese automakers are clearing a house, but Tesla's still selling a bunch of Model Ys and Model 3s, okay? Mm-hmm. So the bot could do the same thing there, but I think the one thing people should think about when it comes to humanoids is that I believe humanoid robots are going to be a gigantic national security variable, where I find it very hard to believe that as these models get much better and these units become very powerful and usable, I don't see how China allows the sale of humanoid robots in China, and I don't see how the US allows the sale of Chinese robots in the US. And I think this is sort of the discussion around the multipolar world, and this sort of becomes kind of a geopolitical discussion, because just think about it for a second. If you're the United States, would you allow 1 million Chinese humanoid robots that are smarter than the average human and can do most of the jobs and have all that power to be able to execute those jobs? Would you allow them to have that kind of a technology in your country?
Yeah.
Right? And it's they're already banning the drones. They're already banning the self-driving cars. The humanoid robots are the obvious next step. And then in China, in retaliation or logically, will do the same thing. So it's like Tesla, from a humanoid perspective, has multiple things, quote unquote, going for it, is that they're going to be very good at building it, But then also, like, we're not going to allow Chinese robots to be sold in the United States, you guys.
Yes. Yeah.
It's not going to happen.
Now,
you know,
I want to ask you a little bit of a question that might get you in trouble.
Oh, great.
Which company is going to zero due to the effects of some of the changes that Elon might be making? And what I'm referring to here is, does Starlink get so good that some of the broadband businesses and, you know, cable companies, who is going, like, I see someone saying, ask him about Uber.
Yeah,
Who's going to
Uber,
zero?
obviously. My poor, you know, I feel bad because the CEO of Uber is Persian, like I am. I'm Iranian as well, Dara. He's my Persian brother from another mother. He's a great CEO. He does great work. The people at Uber are amazing. But it's very hard for me to get my head wrapped around how Uber, in its current form, is able to weather the storm that a self-driving network that's vertically owned and operated, how they're going to be able to survive that at scale. The only way they survive is if this continual thing with Robotaxi that's taken forever for it to scale, that gives them a chance of survival, because at least they can pivot to something else. Because I don't see how Uber survives in a world where you have in its current form, when you have a company that is able to manufacture as many Uber drivers that there are in the United States every 6 months. I don't see how they survive that, because, like, what is the forcing function for Tesla to want to offload that fleet onto Uber just to give them a cut of the margin? That's insane. So what are they going to do, which they're already doing? They're going to bring all that stuff in-house. They're going to have their own app. And then what they're going to do against Uber, they're going to beat them on price, because the cost per mile of a self-driving vehicle is a fraction of that of a human-driven one. And so Uber is in this pickle where if they add self-driving cars to their network, they can't actually benefit from a profitability perspective, because the second they start undercutting their human drivers will stop driving. Right? There won't be enough drivers on the network, and that destroys their network effects, and then wait times go up like crazy. So the only way for Uber to retain its network effect is to make the cost per mile high enough to attract enough drivers. Okay? But if Tesla is capable of manufacturing, again, like I said, 2 million cars per year, which is double the size of the Uber fleet right now in the United States, and all of those cars, let's say, in a hypothetical, can drive themselves and they're on the Robotaxi network, hypothetically, even if it's a fraction of that, let's say market by market. For example, in Austin, they increased their geofence in the Dallas-Fort Worth area to cover the entire of DFW 60-mile radius. And they're like, guys, okay, so Cybercat or Robotaxi is live in this area, or SF, pick an area. You know, you can hail a Robotaxi for $1.50 per mile. Check it out. Go, and then Elon will make a post on X. It will go viral. You know, so 50,000 people will download it, and then good luck taking an Uber after that. Like, why would you hail an Uber for almost double the price when you can just get a private experience that's consistent every single time, and it's safe and it's comfortable, and it's like, you know exactly what you're getting every time. You don't have to deal with the variability of an Uber driver.
So what I would say is that, you know, I believe that there's going to be a couple different competitors, because the wait times on Tesla, while I do think that they can get the best pricing, is there enough vehicles for the demand that they're about to see?
Well, that's my point. My point is the Tesla can manufacture 2 million Teslas per year that can all drive themselves. So,
yeah, but it's still not going to be. It's not going to be comparative to every other auto manufacturer put together.
Yeah, but Uber only has 1 million Uber. So it's we shouldn't look at it from the units of the cars. We should look at it from the labor that you can hire to drive those cars. Right? So okay. Uber is limited by the number of drivers. It's not limited by the number of cars. And the reason why they have a 1 million unit fleet in the United States is because they are able to charge a high enough price where it's worth it for people to want to drive for Uber. Mm-hmm. Right? If let's say Robotaxi starts charging $1.50 per mile or $2 per mile, okay? And right now Uber, like, to the customer, and Uber is charging, I think on average like $2.80 nationally. Let's say Uber is like, crap, I actually like I got to reduce my prices. Let's go down to $2 per mile. How many people are actually going to take the risk to give rides to people when they're not making nearly as much money as they were before? So their network effects collapse. It goes down. And so now their wait times go up relative to Tesla. And all Tesla has to do is just manufacture another car out of their factory, and they're doing 10,000 of them per week. So it becomes extremely easy for them to add cars to the network, whereas Uber in its current form has to pay people more to attract them to the network. So for Uber to get more cars, they have to raise prices. Tesla just manufactures them.
Right. And if the swing of them trying to bring on robotaxis like Waymo is either going to add on a cost on top of Waymo's price, which is still more expensive to Tesla, but then undercutting their own drivers, which also might
reduces the network effect,
create a ripple there as well.
They're in a pickle.
It's and then even if they do somehow figure out to bring on all of these robotaxis, and you're taking 30% of a per mile that went from 280 down to 180, you're seeing a collapse in revenue and profitability anyway.
Yeah, and then why would you exactly? You got it, nailed it.
Yeah,
you got it. So it's like what's so even if they were to find a partner in Waymo that was able to give them as many cars as they wanted, they have to put their entire fleet out of business to be competitive with a company that is 100% autonomous.
Now, when does this happen?
Great question. I have no idea.
Yeah,
like, and that's part of Uber's survival long term.
I've been following the Tesla story for a long time. I mean,
yeah,
way back in 2015, I was watching, Solving the Money Problem and Hyperchain. All those guys, like following all the early Tesla individuals, and Robotaxi was a big part back then.
Yeah.
We are starting to absolutely see some real efforts here. I mean, $99 a month can get you thousands of miles of uninterrupted driving, but still regulatory problems, 100%. Getting the cyber cabs onto the road. It seems like it might still be years away.
Maybe. So like that would be the bull case for Uber, is that could very well be the case. It's like, because you think about it, like we just walked through a very disruptive force to the existing legacy network, which I'll call Uber, right? It's the existing legacy network of transportation. They're not just going to lie down and take it. You've already seen them in New Jersey trying to partner with Uber's trying to partner with labor unions for drivers to try and slow down the adoption of self-driving vehicles. Why are they doing that? Because they know that they're not going to be able to do this quickly, because it's going to destroy their network effects. So for Uber to be able to have a successful future, they need for this to go as slowly as humanly possible.
Sure.
And they'll do whatever they need to do from a business perspective that is legal for them to be able to do that. But then ask yourself this question: why are Waymo and Uber at dire straits now? They had a great relationship, but now Waymo is like they're no longer partner. Ask yourself why that is. It's because Uber cannot facilitate their technology, because they are not capable of providing the cost per mile for Waymo to be able to take a larger share versus their existing network, because it would destroy their network effects. It just will. People will not drive at a low enough cost per mile, right? So the only hope for Uber to be successful long-term and to survive and figure out what to pivot to or transition to or slowly transition into this new future is for this to go as slowly as humanly possible. And for as long as that's true, Tesla's undervalued and Uber is going to be just fine, right? But I go back to the point of like, I don't drive my car anymore. Like if people are doubtful of this technology, I see the comments. I love your comment section. Amazing people. I love the I was going to say the tug and pull, the push and pull that we're having. So love you guys very much. I love the fact that people are want to test these theses. Just go drive a Tesla. Just get yourself in the butt of a Tesla, turn on self-driving, and then ask yourself, will they actually solve this? That's all you have to do. And then it'll become a very obvious yes. Of course they're going to solve it. Yeah, but I don't know when. And that's the tension. So if you believe it's going to work, you become a Tesla bull. If you believe it's going to take a long time, you look somewhere else. It's very, very easy. But it's very hard for me to believe it's not going to work when I experience the technology every single day. It's just impossible for me to believe it's not going to work, because I already don't drive.
A lot of the customers, going back to SpaceX, whenever we talk about businesses going to zero, in terms of some of the other telecom businesses, a lot of the deals that SpaceX has done previously has been for external customers. It seems like a lot of the launches today are for primarily Starlink and for SpaceX's own use. What does, I don't know the full commentary of what Elon said about this in the future, but are they looking to just service themselves in the future, or
Yeah. I
are
mean,
you
it's
worried
going
about
to
those
be
customers or those companies in general over time?
No, I think if anything, I think that the net number of dollars that will come from outside customers will increase. But I think as a percentage share of total capacity, I think it's probably going to be even bigger SpaceX over time.
Gotcha.
So it becomes a question of like, you know, you think about like, how big is a market where you have hundreds of thousands of rockets going up every single year that are putting up, I don't know, 200 tons per launch into orbit or wherever. Like, you need a lot of freaking satellites, you guys. Like, we need a lot of satellites. So the question becomes, how many companies are out there that make a lot of satellites? Not that many. So the fact that that a majority of their capacity of their shipments are Starlink is just a function of that there's not enough people out there that would just buy those launches from SpaceX. They could launch more stuff theoretically, but there's just not enough demand, right? But as cost of space goes down, especially through Starship, more and more companies will come to and there's a bunch of startups. There's a bunch of space startups starting to come up. It's a very nascent industry. But I mean, if you're SpaceX and you know that, hey, Starlink is going to make me 60% margin and AI data center is going to make me 80% plus margin, I'm going to stuff every freaking rocket with those satellites. Why wouldn't? I would be an idiot not to. So, and then the market takes over, right? So then like, at that point, it's like, okay, so if I'm giving up a ton to orbit, right? Then, and I know I can make 80% on this unit, then I'm going to charge some sort of market price for that unit of payload so that it makes sense for me not to launch that. Yeah. And then that becomes it's like, this is what's so exciting about this time. Is like we're talking about brand new industries. Like it's like now we're talking about the economics of space. It's like it's great, So it's
everyone's talking about when this CapEx cycle is about to end, and here we're talking about physical robotics and data centers in space. And Elon does not believe like this is purely just the beginning. And I mean that's what makes a market though is different opinions in the build out.
I one of my favorite theories, and this is going to make me sound even more crazy. I can tell your audience is like thinks I'm insane, and they're right.
No, they think I'm crazy too. So
yes, we're in the perfect place. I think the biggest risk for this, and I'm going to sound like an absolute crazy person, I don't think there's going to be enough cash to fund these things.
Well, I mean that was one of my concerns as well. It seems like
I think
a lot.
We're going to run out of cash, and then I think we're going to have to even take out more against the future. We're gonna have to like start pulling in more cash from the future. We're gonna have to, maybe we need to go to like I don't know. It's gonna get really strange because the cost of capital is gonna go up, which is probably gonna make interest rates go up too. It's like very weird. I have no idea what's gonna. I mean, that sounds absolutely insane, but I think that's more likely than a bubble. Let's say, like a bubble is 20% chance or less, and I think cost of capital going up because there's not enough cash. 64%, 65%.
But I couldn't imagine a more exciting timeline, though. I mean, like,
that's awesome.
I'd rather the timeline where the amount of innovation that's happening is hard to wrap your mind around. That seems extremely exciting to cover and be a part of.
It's exciting. Like, it juices me up in the morning. Like, honestly, like for me, it's the knowing that, I will tell you like a little bit of a personal story. Like, I became a dad about 2 years ago.
Yeah, congratulations.
And during that time, thanks, man. I appreciate it. The best thing, everybody who's listening, you don't have a kid, go have one right now. Figure it out. Just,
I'm on. I want to end the stream.
Okay, perfect. But one of the things I went through, is I was looking around the world. I'm like, man, it doesn't feel like there's enough things happening that feel good. Like it felt like we're going towards this like weird like downward spiral of sorts. But as of late, I've become very rejuvenated in my optimism because I'm seeing all these unbelievable entrepreneurs that are coming up everywhere. Just like so many exciting new companies, so many exciting new technologies, like the whole thing with the Moderna and the Merck vaccine that, like AI helped develop a cancer. like, how is that not the greatest thing? Like that, and that's what gets me super excited. And we're so fortunate to live in not only in a country that harvests this type of innovation, but during a time where we're seeing all of this happen. And that's ultimately what's most exciting for me. It's like I get to live through this moment with people like you and everybody else, where we can all just be like, "What is going on? This is crazy." Yeah. That's awesome. Yeah. That's awesome. So
no, I like that Elon saying where I'd rather be optimistic and wrong than pessimistic and right. I believe in a very, very optimistic future, and I can't wait to see what happens.
Same, brother.
Farzad, by the way, if anyone doesn't follow Farzad online, he has an X, also a YouTube channel as well, doing extremely well on both. And if people haven't seen his recent boring company, the what do you call it? Like walkthrough, I guess, or preview. That was a really, really fun video that I saw. So go ahead and check that out. But brother, any last words that you wanted to say, or should we wrap there?
Yeah, let's wrap there, man. Thank you so much for having me. I appreciate your awesome community. Thank you guys for having me and letting me talk crazy for an hour. And yeah, man, I really appreciate everything you do. You do a phenomenal job. If everybody's watching right now, you're not subscribed, you haven't liked this video, you better do it right now.
That's why you're a better YouTuber than me.
Do it right now, or I shouldn't make threats. Please like and subscribe. No, but seriously, you do great work, man.
Farzad, for just 1 second. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Bye for now.
Bye, everybody.